To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
So friends, I welcome you all to the discussion on CA final indirect taxes. When I say indirect taxes, it's not just about GST, it's about both GST as well as customs. Some students have been asking me yesterday itself, sir, it's written as GST, will you take up customs too? We clearly wrote CA for indirect taxes, so don't worry. Even in customs, we'll talk important areas like valuation, baggage, interesting issues. We'll definitely talk for sure. Don't worry about it. Okay. So, when I was talking about this indirect taxes, so we're going to spend some good time on morning and evening 2 sessions. We'll spend some time. Morning 3 hours and evening 3 hours. And last 15-20 minutes, we'll restrict ourselves for solving all your queries. And one small suggestion what I'll give you is, you restrict your queries to the particular topic what we're discussing. So that next time whenever a topic comes up again, at that time you can ask queries related to that topic also. Because for example, today, I planned 3 topics for you. The basics topic, that's very simple. And we have got one very important topic which comes for minimum 4 marks in the exam. That is time of supply. We'll also spend a little bit time on a topic called assessment and audit. Even that's coming in exam for 4 marks. So whatever queries you have at the end of the session, restrict your queries to these topics so that whatever specific queries you have related to other topics, even that we can answer when a specific topic comes up. So don't worry. Okay. So we'll definitely make sure that by the end of the classes, all your queries are answered. That's our responsibility for sure. Don't worry about it. Clear? Yeah. Come on. When I talk about our CA final indirect taxes, as you all are aware, that's split into 75 marks and 25 marks. Wherein 75 marks is for your GST and 25 marks is for your customs. And of course, your FTP, which is in short known as foreign trade policy. Even that's slightly interesting and important. Even that keeps coming in the exam for a lot of times for 4 marks too. And as you all know, guys, customs, we had almost about 12-13 topics earlier, but almost about 6-7 topics have been removed by ICI. So number of topics which were there have been drastically reduced now compared to what was there earlier. Clear? Right. So now, in 75 marks of GST, we have got a lot of interesting topics. We have discussion about supply, and connected to supply, we have topics like time of supply, value of supply, place of supply, and we have got one beautiful topic for which I designated a separate session for that. That's nothing but our input tax credit, which keeps coming in the exam for minimum 12 to 14 marks. That's one such topic which keeps coming in the exam for every time. Because at CFN level, that's extremely important. So on that, we'll spend some good time. Then, in 25 marks from customs, we have got some good topics like valuation, we have got topics like baggage, a lot of interesting issues are there. Now, one thing which I want to clearly tell you guys is something very important is that students have a thought process always that, sir, 70 marks will be your straight away Q&A questions and 30 marks will be our multiple choice questions. When I say 30 marks is multiple choice questions, guys, one thing let me tell you, multiple choice questions are not something which we have to mug up and straight away go to the exam. Because I keep seeing that students keep running around wherever I take classes, students keep running around all the time, where they keep saying that, sir, we want MCQ book, MCQ book, MCQ book. I keep seeing them holding books of MCQs where they have got 300, 500, 600 MCQs they have, and with that MCQs they keep sitting and keep on reading that MCQs, mugging up that MCQs and keep going. But let me tell you guys, MCQs are not those which you need to mug up and go to the exam. It's not like that. MCQs are not those which you need to mug up and go to the exam. Multiple choice questions are those basically which you need to answer by the conceptual knowledge what you carry. So ultimately what is very important is that your knowledge and grip and command over subject is very important, which will actually make sure that you guys get this 30 marks of multiple choice questions, which is very important to score. Because as we all know, we have got a magic number called 60, nothing but our exemption, and half of your exemption comes from multiple choice questions. And let me tell you, in CA final group 2, the most scoring is your indirect taxes, not because I am teaching or indirect taxation is going on, but the fact is very simple. I say that for the fact and reason that in your group 2, comparatively, syllabus wise, quantum wise, at the same time scoring wise, indirect tax is very scoring. And as on today's date, we don't have case laws also much in GST. By much, there is no case laws for exams from GST. We just have got few case laws from customs. That's it. So it's not really something which you need to take too much pressure upon. But definitely, effort is required to make sure to do it. But CFI man, come on, nothing will come just like that. So we'll make sure that we'll do things perfectly. Clear? So friends, let's start upon without any delay. So today's session, basically what I planned is that we are going to talk on 3 topics. One, we'll talk about introduction to GST, wherein few special issues we have got to talk. I mean, already you know what introduction to GST, when GST has come, how it has come and all. But some key points are there which I want to discuss with you. Second, we'll spend some good time on discussion about time of supply. Even that we'll talk. Something extremely important, which generally keeps coming in the exam for a minimum 4 marks. That we'll talk for sure. Another interesting topic known as assessment and audit. This is one such area which is generally coming in exam for 4 marks. And in that, some special points are related to audit, wherein we have got some special or types of audit, like special audit. We have got something like special audit, departmental audit. We have got one more thing called audit under section 35(5). Like that, 2-3 kinds of audit are there. Even that's important to learn. Where we'll discuss all those 3 kinds of topics in the morning session for us. Evening, I'll let you know what we are going to talk. Don't worry about it. Are we clear? So without any delay, let's start the discussion, guys. Come on, guys. So what we have done is, I already shared the PowerPoint presentations with you. Already that PDF files are there with you. Just keep that handy with you so that you can discuss the things more easily. See, basically, I'm also new to this kind of technologies and all. Subject is never new to us, but technology is something which everyone is experimenting and everyone is trying to do something really interesting, for the fact and reason that outside what is going on is making us to think much more as to how do we plan the things in a more effective and the best manner. So I'll make sure that in the presentation, what I've given it to you, please keep it handy so that in the course of discussion, whatever I do, I'll highlight a lot of things and also mark few important points and make you write some points. So please keep that handy with you. Yeah. Now, the first thing, guys, these 2 guys who are very important for us, you know that very well. So basically, if you observe there very clearly, guys, France was the first country to introduce GST. That point we all know very well, that they introduced GST way back in 1954, and people keep thinking. In fact, one of our client, he was asking me a question when GST has come. Sir, what a new thing India has invented. GST is a new kind of thing what India has invented. I was so surprised actually with that word called invented. But let me tell you, India did not invent GST. We discovered that GST. Basically, GST is not something what India has invented. GST is something which is already there in more than 160 countries. You can see that word. France was the first country to introduce GST way back in 1954. Later, it was implemented across 160 countries across the globe because this tax is more transparent and more viable and neutral. How it is transparent and neutral, that we'll talk. Don't worry. But one thing which I want to tell you guys is that France was the first country which introduced GST way back in 1954. After that, close to more than 160 countries have introduced GST. It is not that India has invented GST. India has basically taken up that GST from different countries, and we have also added few our own flavor and Indian touch and brought that GST into India. Right? Now, GST is extended to whole of India, including what, my dear friends? Jammu and Kashmir. Now, in this context, one interesting thing I want to tell you guys. What is that? Listen. Now, see, basically, what is happening is, in Constitution, I'm sure we all know about Constitution. Constitution, in 7th schedule, guys, we have got 3 lists. Most of you would have already heard this. That's nothing but union list. Second one is called state list. Third one is called concurrent list. Now let me tell you guys, union list contains those matters on which central government has got power to charge. State list contains those matters on which state government has got power. Concurrent list contains those items on which central and state together will take a particular decision. Now, why I told this point? I mean, I know that most of you would have already know this particular point about union list, state list, concurrent list, because that is a basic thing what you require to learn whenever you learn anything related to tax. Union list basically deals with items on which power is there with central government, state list, state government, concurrent list, both central and state government. Now, what I want to tell you guys in this context is that in India, prior to GST, there were some taxes levied by central government only, and there were some taxes levied by state government only. But there was never a tax in India. There was never a tax in India which was levied by central and state government together. I repeat this point one more time. There were some taxes in India which were levied exclusively by central government, and there were some taxes in India which were levied exclusively by state government. But there was never a tax in India which was levied by central and state government together. That means there is no concept of dual model what we have. In fact, our GST, as most of you are aware, it's basically called as dual GST model. So basically, we have got dual GST model where central and state together will levy the GST. That is, we have got central GST as well as we have got state GST what is being levied. That is, in India, we have got a model called dual GST model wherein central and state together will impose the GST. And let me tell you and repeat that point once again, that is, prior to GST law, there were some taxes levied by central government and there were some taxes levied by state government. But there was no tax levied by central and state together. Now, why I told this particular point to you guys? Let me tell you. Now, my dear friends, when there were some taxes levied by central government only, and some taxes levied by state government only, to integrate the powers, basically, there was a need for amendment of constitution. I repeat one more time. There was a need for amendment of constitution. There was basically need for amendment of constitution. Why there is a need to amend the constitution? For the reason because constitution gave exclusive powers to center and exclusive power to state, but they did not give dual powers to both of them to charge the GST. For example, when we go to restaurants, we find the GST as CGST 2.5%, SGST 2.5%. So there is a multiple GST which is charged, that is CGST and SGST. Correct? Now, so in order to give dual powers, they were basically need to amend the constitution. So what we have done is, we have got Constitution 122nd Amendment Bill. This Constitution 122nd Amendment Bill was actually brought in 2014, which was subsequently became Constitution 101st Amendment Act 2016. So what was bill in 2014 subsequently became Act in 2016. But you need to observe that there is a small difference in number, that this is 122, this is 101. And sometimes students keep asking me, sir, why this is 122 or why this is 101? For the simple reason that every bill may not become Act. For the reason that most of you already know that any bill, any kind of bill will be actually passed by Lok Sabha, Rajya Sabha, then it is signed by President. So there could be high number of bills which actually will not be passed at any stage, could be at Lok Sabha, could be at Rajya Sabha, or could not be signed by President for whatever reason it is. Right? So 122nd Amendment Bill subsequently became 101 Amendment Act. 122nd Amendment Bill would have subsequently become 101 Amendment Act. So please, in exam, if multiple choice question comes about Amendment Act, please don't write 122nd. It's 101. 122nd is Bill. 101 is Act. I hope we are clear. Right. Next. So friends, now why one more interesting issue which I want to tell you is, subsequently what government has done is, they have brought GST bills which they introduced in Lok Sabha, subsequently introduced in Rajya Sabha, and subsequently they were signed by President also. Now one thing I want to tell you in this context, when the GST bills were brought, there was actually a requirement that all the states should pass their respective GST bills. States should pass their respective GST bills. In fact, Telangana was the first state to pass their GST bill, and subsequently after that, almost majority of the states have passed their bills. But one interesting thing which you need to note is that by 30th June 2017, all states have passed their respective GST bills except Jammu and Kashmir. That means, what I want to tell you guys is, we all know the fact that GST has come into India with effect from 1st of July 2017. This everybody knows. Everybody knows this concept that GST has come to India with effect from 1st of July 2017. Now, one thing which I want to tell you guys is that when GST has come to India 1st of July 2017, GST was applicable to whole of India except Jammu and Kashmir. So for Jammu and Kashmir, GST was not applicable only. So technically, so strictly speaking, as on 1st of July, GST was applicable to whole of India except Jammu and Kashmir. But subsequently, on 8th of July 2017, Jammu and Kashmir also passed their respective GST bill. In fact, when GST has come into India, they put up the slogan called One Nation, One Tax. But let me tell you that word One Nation, One Tax was not successful as on 1st of July because it was applicable to whole of India except Jammu and Kashmir. Jammu and Kashmir, that was actually made applicable on 8th of July. But on 8th of July, that slogan became successful. So in exam, there is a possibility they might play a small point. And let me tell you, the idea of GST in India started way back in the year 2000. Subsequently, in 2003, government formed one task force committee headed by one person called Mr. Vijay Kelkar. He is one top economist. He was asked to basically study GST and recommend GST whether it's good or not for India. And he recommended that GST should come to India because it's definitely going to give a boost to the economy. And today's date, we already have GST picture. So I spent little bit time on introduction for GST in terms of how GST evolved into India, for the reason that it's important that you have some knowledge on how GST has come to India. Basically, we call it as history of GST or genesis of GST. It's important to know that because there is a possibility a question can trigger in the exam. Clear? So let's go back. Come back to discussion, guys. Come on. GST is extended to what? Whole of India, including Jammu and Kashmir. Come on. As on 1st of July, was GST applicable to Jammu and Kashmir? The answer is no. But from 8th of July 2017, GST is applicable to whole of India, including Jammu and Kashmir. That's really interesting. So guys, I want you to guys look at the last box. Come on. GST is what? GST is a destination-based tax on consumption of goods and services. It is a levy at all stages, right from manufacture up to final consumption, with credit of taxes paid in previous stage available as set off. In nutshell, in a simple way, only on value addition will be taxed, and the burden of tax is always borne by final consumer. That's basically the inherent nature of indirect taxes. We keep saying indirect taxes for the reason because ultimate burden falls on the consumer. We have a facility to shift the burden to the consumer. That's what we call indirect taxes. Technically, we say that indirect tax is a tax where impact and incidence is on different person. Impact means who is liable to pay. Incidence means who actually pays. Both are different when it comes to indirect taxes. That's actually the beauty in indirect taxes. Income tax, we can't shift the burden, but definitely we can shift the burden of GST. That's very clear. Clear? Now, I've got a small question, guys. Think properly and tell me. Come on, guys. Prior to GST, I'm talking. Let's say there's one person, Mr. A, who is basically in Telangana state. One person, Mr. B, who is basically in Andhra Pradesh. What he has done is he sold goods, let's say at a value of 10 lakhs. When he sold goods at a value of 10 lakhs, tell me guys, what kind of tax will come? First of all, will tax come? 100% answer is yes. Tax will come for sure. But the question is now, what kind of tax will come? 100%. Already a couple of them already answered in the chat room. Good. Definitely what will come is CST will come, undoubtedly. Undoubtedly what will come is CST will come. Now the interesting point what I have is, when CST will come, what does CST stands for? Central Sales Tax. Now the CST is something which is actually levied by central government. CST is something which is actually levied by central government and collected by state government. CST is levied by central government, collected by state government. So let's say, my dear friends, in this particular case, when sold goods for 10 lakhs, CST will be charged, let's say, at the rate of 2%. How much 2% comes to 20,000? Now, my question to you is very clearly, this 20,000 is levied by whom? 20,000 is definitely levied by central government. Collected by whom? State government. Now, my question to you straight away is, which state government will actually take that revenue? Come on, somebody, if you can answer in the chat room, I'll feel happy. So basically, it's levied by central government, collected by state government. Which state will take that revenue? Let me tell you guys, the answer is straight away, Telangana government. That money is taken by Telangana government. That is, it's levied by central government, collected by state government. It's levied by central, collected by state. Nothing but Telangana government. That means that money is actually going to Telangana government. Now, my question to you guys is very clear is that when you say that money is going to Telangana government, my interesting question what I have is something like this. Listen very clearly and think properly, guys. Now, can can B take input tax credit? That's basically my question. Can B take input tax credit? Definitely 101% my answer is no. Let me tell you straight away, the answer is no. The answer is no for the fact and reason that this tax is basically levied by central government and collected by state government. Which state is taking that money? Nothing but Telangana government. When Telangana government is taking that money, why would AP government give credit for the tax paid to Telangana government? AP government will obviously not give credit for the tax paid to Telangana government. 101%, that's for sure. AP government will definitely not give credit for the tax paid to Telangana government, because definitely there is something called ego issue which is there with every respective state. Basically, they don't give credit. AP government will not give credit for the tax paid by Telangana government. That's very clear and interesting point. I'm sure it makes sense, everybody. And now, to break that ice, government has to take too much of effort to bring GST into India. And a lot of manufacturing states in India have refused to bring GST into India because they definitely will lose that revenue. They definitely will lose. You might ask me, so why would the manufacturing state lose? The manufacturing state will lose because GST is a destination-based consumption tax. The money will be enjoyed by that state where goods or services are consumed. So basically a state which is into manufacturing will actually lose revenue because they are not into a consumption-oriented regime. Telangana government, obviously from day one they told bring GST because Telangana is more of a consumption state. But a lot of states in India have refused for the reason that they are more into manufacturing. I'm sure that point is making sense for everyone. Now, what government has done is, in order to counterbalance this, so what they have done is, in order to counterbalance this, they told that in order to compensate the states who have lost revenue because of introduction of GST, they brought something called GST compensation cess. I repeat one more time. In order to compensate the states who have lost revenue because of introduction of GST, they brought something called GST compensation cess, which is being imposed on few products, such as tobacco, aerated waters, that is cool drinks. On few products, government is imposing GST compensation cess, and they are using that money in order to compensate the states who have lost revenue because of introduction of GST. That is the reason why practically also when we pay the GST and open that form for payment of tax, in that we'll have something called CGST, SGST, IGST. We also have something called GST compensation cess. So basically what government has done is, in order to compensate the states who have lost revenue on account of introduction of GST, they are charging GST compensation cess. This is being charged in order to compensate the states who have lost revenue on account of introduction of GST. Come on, yes. So GST compensation cess is being charged by the government on few products like tobacco, motor car, and also on products like aerated waters, that is cool drinks. On few products, government is charging GST compensation cess. And this GST compensation cess is being used to compensate the states who have lost revenue on account of introduction of GST. I'm sure this point is clear for everyone. Let's proceed. Now guys, moving forward, an interesting issue which I've got to discuss with you, that is, we have got two interesting kind of things, guys. That is intrastate, other one is called interstate. And one interesting point, my dear friends, under GST law, we don't have a word called purchase and sale. We don't use the word called purchasing goods, selling goods and all. We don't use the word providing service and entering service, but we only use the word called straight away supply. We have a beautiful word called supply under GST law, which is very interesting. Now, when I talk about this word supply, this supply is very wide enough in which too much of depth is involved, which we'll talk in detail in our next session, which is dealt by section 7, supply. Very, very important. Minimum 4 marks will come in the exam. Something extremely important. We'll spend time on that supply thing. But now I'm not talking about what is supply, but what I want to tell you is, in supply, there are two types called intrastate and interstate. Come on. What are the two types here? Intrastate and interstate. Now, In case of intrastate supply, we charge CGST and SGST, or it can be CGST and UTGST. CGST and SGST, or it can be CGST and UTGST. But in case of intrastate supply, we charge something called IGST. For intrastate supply, we charge CGST and SGST. For intrastate supply, we charge something called IGST. And IGST stands for Integrated Goods and Services Tax. That is integrated GST. And first of all, guys, GST full form is not Goods and Service Tax. It is Goods and Services Tax. Please get that point very clearly. I keep wondering sometimes whenever I correct papers, I also do corrections sometimes. So that time I keep observing that students keep writing Goods and Service Tax. It is not Service Tax, man. It is Goods and Services Tax. Please, come on. So guys, so reiterating once what we have done. So which country was the first country to introduce GST? Nothing but our country called France. After that, more than 160 countries have got GST into India. Then India brought it on 1st of July 2017. And as on 1st of July, GST was applicable to whole of India except Jammu and Kashmir. And Jammu and Kashmir has got GST into India on 8th of July. So strictly speaking, with effect from 8th of July, that slogan called One Nation, One Tax became successful. I hope we are clear with that. Next guys, moving ahead. Please get back to your slide, please. Come on. We have got a word called destination-based tax. That is, tax will accrue to the taxing authority which has jurisdiction over the place of what? Consumption. That is where we say GST is a destination-based consumption tax. We say destination-based consumption tax because tax is enjoyed by that state where goods or services are consumed. That's very important for all of us to know. I hope we are clear, everybody. Right, come on. Let's proceed further. Now, GST would replace the following taxes. That is, what are all the taxes which are actually replaced by GST? That's important for us to know. That's very important for us to know for the straight reason and fact that, I mean, a question came in the exam one time where they asked a question whether municipal tax is subsumed in GST. We use the word called subsumed in GST or subsumed in GST. It basically means what are all those which have got covered up in GST. Now, the interesting point what they asked in the exam is municipal tax subsumed in GST? Answer is 100% no. Municipal tax still exists. So let's discuss what are all those taxes which are actually subsumed in GST. Let's see that. I divide them into two parts, guys. Taxes levied and collected by central and then state taxes. Central, what is that? Central excise duty, duties of excise, medicinal and toilet preparations, additional duties of excise, goods of special importance, then additional duties of excise, textile and textile products. Otherwise, all these are related to straight away excise duty. All excise duty related things have been subsumed in GST. So as on today's date, we don't have excise duty. I mean, on majority of the products. Why did I say majority of the products? Let me tell you, there is one such product called tobacco. Tobacco is one such product on which central excise duty as well as GST both are being levied. That's the reason why whenever we go to movies, every time we see that please smoking and drinking is injurious to health. That's why they keep saying that. And in fact, some people in India have questioned the government, why are you imposing both old as well as new taxes? That's actually not correct. You are trying to loot the people and trying to make more revenue. Government gave a reply, we are charging more taxes for the benefit of public only, so that if we charge more taxes, they won't consume that. What a wonderful statement given by the government. In fact, I read an article, they use a word called, we are trying to charge more taxes so as to promote social welfare. That's a statement they have given. See that, guys, go on now. Next. Additional duties of customs known as CVD. Special additional duty, this will be technically called as special CVD. Now, an interesting point I'll tell you guys, that is, friends, whenever we talk about imports. So prior to GST law, when we were doing imports, we used to pay BCD plus CVD plus special CVD. Why was this CVD charged? CVD stands for countervailing duty, guys. Now, what is this countervailing duty? If you manufacture a good in India, you are required to pay excise duty. Now, instead of manufacturing that good, if you import from outside, government is actually losing that excise duty. Now, in order to compensate that revenue of excise duty, government is charging something called CVD, which stands for countervailing duty. In the same manner, if you buy that good in India, you would have paid VAT or GST. Now, because you import from another country, government has lost that VAT or GST. In order to compensate that revenue, government is collecting special CBD. So basically, guys, let me tell you, in case of imports, government will squeeze the revenue. They will charge left and right because government actively tries to discourage its imports and they actively try to encourage exports. Obviously, because exports will get revenue for the government. Clear? Now, coming back to discussion. So prior to GST law, in case of imports, we used to charge BCD plus CVD plus special CVD. But after GST has come to India, post GST effect is straight simple. After GST has come to India, government is straight away charging BCD plus IGST, wherein BCD stands for Basic Customs Duty, IGST stands for Integrated GST. So prior to GST, what was charged? BCD plus CVD plus special CVD. But now what is being charged? BCD plus IGST. So it's very clear that prior to GST law in India, they used to collect BCD plus CVD plus special CVD. But after GST has come to India, they are collecting BCD plus IGST. Please have clarity on this point. High possibility question can trigger. We'll come back to this once again very soon. Next guys, next tax is what is subsumed? Come on, service tax. Obviously, one such tax which was brought by our great finance minister called Manmohan Singh. It was brought way back in 1994 by Dr. Manmohan Singh. This was brought into India. And after that, it evolved in a very big manner. So as on today, service tax is not there, even that is subsumed in GST. Now, last point, guys, central surcharge and cess as far as they relate to supply of goods and services. Why did I write this point? That's very clear because in service tax, you would have heard one word called Swachh Bharat cess, Krishi Kalyan cess. Because our service tax rate earlier was 14% basic rate, 0.5% Swachh Bharat cess, 0.5% Krishi Kalyan cess. Now Swachh Bharat cess, Krishi Kalyan cess, both are not there. Obviously, for a simple reason that when service tax is not there, when service tax is subsumed in GST, obviously Swachh Bharat cess and Krishi Kalyan cess is also subsumed in GST. That's very clear point. Next, moving ahead. State taxes that subsumed in GST. What are those? Come on. State VAT. What is VAT, guys? Come on. Value added tax levied by central government. State VAT, value added tax levied by state government, collected by state government. In this context, I want to tell you one very interesting thing, guys. That is, in case of state VAT levied by state government, there is something called alcoholic liquor. I'm not talking about all types of alcoholic liquor. I'm talking only about alcoholic liquor for human consumption. Now, why am I talking about alcoholic liquor for human consumption? Let me tell you. Sir, GST is a tax. I repeat one more time. In fact, I'll open the definition later. One second. I already have the definition. You can scroll it across in the notes. You can see last but one slide. That is your Article 366, guys. Come on, look at that, please. In Article 366, GST is defined as per Article 366 12A, which clearly says GST means a tax on supply of goods or services or both. So GST is a tax levied on supply of goods also, services also, or both, except taxes on what's it? Alcoholic liquor for human consumption. That is, alcohol liquor for human consumption is one such product which is permanently kept outside GST. In fact, very clear point is that states government have clearly told central government that we all will support for GST provided alcoholic liquor is not covered under GST. That's very clearly what they told. That is, alcohol liquor should be definitely kept outside GST. So one point very clearly now is that GST will apply. GST will apply on all goods or services or both. All goods or services or both, except what? Alcoholic liquor for human consumption. That's an important point on which all of you guys should have a clarity on. So alcohol liquor for human consumption is permanently kept outside GST. So now, on this alcohol liquor for human consumption, what is levied? Definitely state VAT is charged. state government is actually making a good amount of revenue from alcohol and liquor for human consumption. So friends, come on, what is definition for GST? GST is a tax on supply of all goods or services or both, except alcohol and liquor for human consumption. Alcohol and liquor for human consumption still continues to be governed by the existing taxes only. We have got a question from Chaitanya. He is asking, what about electricity, sir? Electricity is also kept outside GST, my dear friend. In fact, in exemption list, we have got one point, transmission or distribution of electricity is completely exempt in GST law. Electricity also is kept out of GST. So don't worry. That's where practically whenever we get power bills, on that they don't charge GST at all. Electricity also kept outside GST. But in definition, they did not say excluding electricity. It's given by notification. In definition, they only gave GST is a tax on supply of all goods or services or both, except alcohol and liquor for human consumption. That's all they told. Next. Moving ahead. Central sales tax, already we know, CST. We have got a question from Khatiravan. He's asking, what about some petroleum products too? Good question. Friend, let me tell you, whenever we talk about this petroleum products, one point is very clear that GST is a tax levied on all goods services except alcohol liquor for human consumption. This is the definition given by the law. But there are 5 petroleum products which are temporarily kept outside GST. I repeat one more time. There are 5 petroleum products which are temporarily kept outside GST. And the 5 petroleum products are petroleum crude, high-speed diesel. I actually gave it somewhere. Next page, you have that, guys. Come on, see that. Please see the next page. Commodities outside GST. See the next slide. First, alcohol liquor for human consumption. Chaitanya, you can see that. Electricity. Next one. Temporarily kept outside GST. What is that? Petroleum crude. Then petrol. Student is asking. So both you wrote petrol again. Friend, first one is petroleum crude. Second one is motor spirit. Third one is high-speed diesel. Next, natural gas, aviation turbine fuel. We call it as ATF. They use it for planes, helicopters. They use this aviation turbine fuel. Now, you can see one note what I wrote there. Sir. Existing taxation system will continue. Existing taxation will continue in respect of the above commodities. I'm sure that part is very clear for everyone. So basically, what is the point you need to know now? GST is a tax levied and collected on supply of all goods or services or both, except alcohol and liquor for human consumption. And there are 5 petroleum products which are temporarily kept outside GST. And the 5 petroleum products are petroleum crude, high-speed diesel, motor spirit, natural gas, and aviation turbine fuel. I'm sure we are very clear in this point. I want you to look at this point also. In case of manufacture of tobacco, both excise duty and GST is levied. Both excise duty and GST is levied. That's what I already clarified to you before also. Are we clear? Right. Come back to discussion. Come on, yes. So state VAT, central sales tax. Next one is what? Luxury tax. Again, what is luxury tax? Luxury tax was actually levied by star hotels or big hotels and restaurants. They used to charge this luxury tax. That's not there now. Even those guys will charge only GST. In fact, GST has replaced lot of taxes in India have been replaced by GST. In fact, that's where they gave that slogan called One Nation, One Tax. In fact, one of my clients, he called me one day and asked, sir, henceforth I will not pay income tax. I asked, my dear friend, why? He told, sir, GST, they told One Nation, One Tax, I will not pay income tax now. My dear friend, let me tell you, income tax is not subsumed in GST. Not that every tax is subsumed in GST. So it's very clear that only few amount of taxes are got subsumed in GST. That's why we are trying to discuss all these points. I've seen one question in the exam and time come up where they asked what are the taxes subsumed in GST. And couple of times, multiple choice questions have come up where they asked whether the following, which of the following is not subsumed in GST, which of the following is subsumed in GST. So that way question can come. Then entry tax in all forms. In fact, you would have heard one word called octroi. Generally in our finalization of P&L balance sheet, we see this word called octroi, which is very common case. Then entertainment and amusement tax. Entertainment tax. When we used to go to movies, they used to charge entertainment tax. But now, even now when we go to movies, they don't charge entertainment tax, but they do charge something called GST. That's very clear. Then, except when levied by local bodies, there is something called local bodies like municipal corporations. They collect some taxes and those taxes are not subsumed in GST. Those taxes still continue to exist. Then taxes on what, guys? Advertisement. Taxes on advertisement, technical advertisement tax. Then purchase tax. Taxes on betting, gambling, lottery. Taxes on betting, gambling, lotteries. Very interesting and important. In fact, that is actually one good amount of revenue which is actually earned by state government. State government earlier used to collect money on this betting, gambling and lottery. But now we don't have any other special tax. We straight away have GST only. Then state surcharge and cess as they relate to supply of goods or services. So this is an important point which you need to know. What are all the taxes which are subsumed in GST? There is a high possibility a question can come up in the exam. Moving forward. Come on, guys. There's a word called here GST Council. Now, what is that word? Very interesting and very important. GST Council shall make recommendations to the union and state on the taxes, cess, surcharge levied by center, state and the local bodies which may be subsumed in GST. Now, what is this point? I will explain. Listen this. Now, when I talk about GST Council, friends, a lot of times you would have seen in newspapers, TV, paper ads, or anywhere in our mobile, we keep getting updates that 18% rate became 12%, 12 became 5%, 18 became 28, 5 became 28. A lot of times we keep changing in rates, and we keep changing in tax rates, they keep changing in registration limits. So many things keep changing. And now question is, who changes all these things? Before I proceed, we have got one question from Sirish. CST is at central tax. Why is it included in the state taxes? Sirish, it's included in the state tax list only for the reason that it's collected by state government. But let me tell you, CST is levied by central government only. Whether it is levied by center, it's levied by central government, collected by state government. Collected by state government. Revenue comes to state only, but it's actually levied by central government. So it's strictly speaking, it's a central tax only. But don't worry, it's anyways covered in GST now. Now, GST Council, come back to the discussion. So when we talk about the GST Council, guys, GST Council, why it is important to know? Whenever we keep seeing that rates have changed, a lot of things have got changed, all these things, whatever we observe, let me tell you, all the changes to the GST are done by central government on recommendations of GST Council. I repeat again. Any changes related to GST are actually undertaken by central government on the recommendations of a special committee called GST Council. I repeat one more time. All changes related to GST law are done by central government on the recommendations of GST Council. Now, what is GST Council? GST Council is basically a committee where central level persons and state level persons sit together and take decisions related to GST. Now, in this committee, there are certain persons from central side and there are certain persons from state side. And central side, there are two members, guys. One, Union Finance Minister. Second, Minister of State for Finance. The word is Minister of State, but doesn't mean he's a state level person, he's a central level person only. So there are two persons. One is what, sir? Union Finance Minister. Second, Minister of State for Finance. State side, we have got every state representative. In fact, I already gave this in the presentation, guys. I want you to look at that once. Try and look at the slide where I gave out GST Council. Please see that. The concept of GST Council is dealt by Article 279A. Very important. See now. A new Article 279A is inserted to constitute what, my dear friends? GST Council. A new Article 279A is inserted to constitute GST Council. What are the relevant features of this? It basically constituted on 15th September 2016, and what are the members? Union Finance Minister will act as chairperson, Union Minister of State in charge of revenue members, and State Finance Minister of each state, finance or taxation or any other nominated minister. Why I want to highlight this? Because students keep saying always from state side we have got every state finance minister. It is not like that. State side we have got every state representative, which could be finance minister or any other minister, whoever is nominated by the respective state government. But it's clear that we have got from every side one state level representative. Next, Vice Chairman. The state members of the GST Council shall choose one amongst themselves to be the Vice Chairman of the Council for such period as they may decide. Thus, Vice Chairman would be out of the state finance minister, and Central will have no role to play in his selection, appointment and tenure. So basically, if you observe, based on what I wrote here, Union Finance Minister, this guy will act as chairman, and from all the representatives, one of them, they'll elect them and they'll make them as vice chairman. Vice chairman. Come on, see now guys. What is the role of GST Council? The GST Council shall make recommendations to the Union and State on what various taxes, surcharges to be subsumed into GST would be recommended by GST Council. Exemptions including threshold exemptions, model law and principles for levy and place of supply, rates of GST, special provisions made for northeastern states and the state of Jammu and Kashmir. What are the special provisions? We will get to know when I talk about registration, when we talk about composition, we'll actually realize what is that impact of the special states. Next, quorum and meeting. This is very important. What is quorum actually? Quorum is nothing but the minimum number of members to be present to make the meeting valid. Now what they told here is 1/2. I repeat again. They did not say 1.5. I repeat one more time guys. They did not say 1.5. They told it as 1/2. Half of the total number of members of the council shall constitute the quorum at its meeting. And any decision of the GST Council shall be taken at a meeting only. The decision shall be taken by a majority of not less than 3/4 of the weighted votes. Friends, here I want to highlight something interesting. What they have done is, they beautifully designed this concept. What is the beautifully? Listen. Central has got a weight of 1/3. All states together have got a weight of 2/3. Central has got a weight of how much, sir? 1/3 weighted vote. And all states together, they have got 2/3 weighted votes. And to pass a resolution, there should be 3/4 majority. Such a beautiful way they drafted, guys. I repeat one more time. Central has got how much weight? 1/3. 1/3 means what technically? 33.33%. State has got a weight of 2/3. That technically means what? 66.67%. To pass a resolution, how much should be there? To pass a resolution, how much should be there? In order to pass a resolution, there should be a 3/4 majority. And 3/4 is nothing but 75%. So technically, if Central only says yes, 33% is done. So all states only tell yes, 66% is done. But to pass a resolution, we want 75%. So that clearly indicates to us that center alone or state alone cannot take any decision. For any decision to be taken, center and state together should join the hands. Only then a resolution will be passed. That's very clear. So for a resolution to be passed, center and state together should join the hands. Let me give a small example and take 2 minutes so that we'll get full clarity on this point. Come on guys, let's say for some decision, central told yes and states, let's say 24 are present and 18 told yes. 18 told yes. So if central says yes, that means what is done? 1/3 is done. States, what is the weighted vote, sir? 2/3 is the weighted votes. And how many are told yes? 18. How many are present? 24. How much this comes to, guys? Come on. This comes to half, I guess. 36/72. It's half. So if it's half, how much is done? How much is done then? 50% is done. So 50% is done means what is done? 33.33 is done. Plus 50% is done. Yeah, exactly. Come on. What is the total done? Come on. Total done is 83.33% done. If 83.33% is done, straight away that means resolution is passed. So if it is less than 75%, resolution is obviously not passed. I hope this concept is making sense for everybody. So it's very important to know what is the meaning of that word called weighted votes. So what is the central weight is? Central weight is 1/3 and state weight is 2/3. And 2/3 is for all the states put together. And 2/3 is nothing but weighted votes. Are we clear? So, we have got a question from Karthik. Sir, Minister of State for Finance from each state. No, my dear friend. Karthik, let me tell you, when I use this word called Minister of State for Finance, that's what I clearly told. He is not a state level person. He is a central level person only. He is like Deputy Finance Minister. But the designation given to him, the title given to him is Minister of State for Finance. It's not a state level person. It's a central level person only. He is like a Deputy Finance Minister. He is not a state level person. He is a central level person only. But his designation title is Minister of State for Finance. Clear? Done. Thank you. Going back. Come on, see this, very important. The vote of central government is how much? 1/3. And all states together is 2/3. Thus all states can make majority of only 2/3, which is insufficient to make a decision at GST Council. Because central weight is 1/3, state weight is 2/3. But we want a majority of 3/4. That's nothing but 75%. So finally, one last line I will tell before I conclude this GST Council. That is, central alone, state alone cannot take any decision. For a decision to be taken, both central and state together should join hands. Because we want at least 75% majority, at least 3/4 majority for resolution to be passed. One question from Chaitanya. Sir, only 2 members will represent central. Union Finance Minister, Union State Finance Minister. Yes, there are only 2 persons from central side. That's it. That's enough. From state only we have got every state representative. Central side we have got only 2 members. This is only 2 members are present in GST Council. Whatever we learned so far is all about who will be there in the GST Council. Let's go back, guys. So now that's what I was telling you, that GST Council shall make recommendations to the union and state. That's what they do. Come on. Dual GST. Already we discussed this dual GST. That in India we have got dual GST model wherein central and state together will collect the GST. But just look at that once. GST to be levied by center on intra-state supply would be called as central GST, and states also will levy SGST or UTGST. Already we know this. Similarly, IGST will be levied and administered by central on every interstate supply of goods and services. And IGST will be sum total of CGST plus SGST. That's because if CGST is 9%, SGST is 9%. If it's IGST transaction, will directly charge 18%. That's a clear-cut point. I'm sure it makes sense, everybody. Yeah, next. GST to be levied by central is central GST, state is state GST, and integrated GST in case of interstate supply. That's an interesting point. I hope this point makes sense for everybody, sir. Next. Small example. Already you can understand this very clearly. So the goods are supplied, let's say 100 rupees is the value of supply. And let's say GST is 18%. Supplier is in UP, recipient also in UP, assuming that place of supply is also UP. What is place of supply, we'll talk in detail separately. We will charge something called CGST 9%, SGST 9%. That's how we charge and pay to the government. And let me tell you, CGST component will go to the central government, SGST component will go to the state government. That's it. Come on. What are the benefits of GST? A question came in exam one time. What are the advantages of GST? In fact, they use a technical language. While asking the question, guys. They used a word called what are the benefits and what was the need for ushering into GST. What a beautiful language they used. What is the need for ushering into GST? That means they asked the question, what was the fundamental purpose, or what is the fundamental purpose of basically bringing GST into India? See that once. It would mitigate the ill effects of cascading. Cascading is because we get the credit. That's obviously, guys, sometime back already I told you about the credit mechanism. That is, when A was in Telangana state, B was in, let's say, Uttar Pradesh, and goods were supplied prior to GST, prior, let's say for 10 lakhs, what we used to charge? CST. And B could not take credit. But under GST, what will happen? Credit is allowed. That's an interesting fact and point which you need to note. That's for sure. And now, how do we set off that credit? That we'll talk separately. So I'm sure it makes sense, my dear friends. Why do we say this cascade effect of tax? Cascade effect of tax basically means that when we can't get the credit, automatically what will happen? The tax will form part of our cost. When the tax will form part of our cost will keep going up. That's a straight simple point. That's quite obvious actually. Our cost goes up when the credit is not allowed. When the credit is allowed, our cost will definitely come down. That's for sure. I'm sure this point makes sense for everybody. So let's come back. Come on, see now. It would mitigate the ill effects of cascading and pave way for common national markets. Now people will not start looking at whether credit will come if we procure within the state or we procure outside the state. The only thing they look at is the quality of the product and the quality of service. Because earlier there was always a mindset which we used to tell, if I procure within the state, credit will come. If I procure outside the state, credit may not come. So better I'll procure within the state only. But now it's not like that. Whether you procure within the state or you procure outside the state, definitely credit is allowed. That's for sure. Next. Reduction in overall tax burden on goods, which is estimated to be 25 to 30%. Make our products competitive in domestic and international markets. This would instantly spur economic growth. That will increase economic growth. That's very clear. Next. There may also be revenue gain for the center and state due to widening of the tax base, increase in trade volumes, and improved tax compliance. This tax, because it's transparent, it's very clear and transparent, would be easier to administer. So transparency is something which is very important because transparency is something which makes things much more clear. Next. Concept of IGST. As I was telling you, my dear friends, IGST would be levied and collected by center on the interstate supply of goods. And as per article, I want you to remember this, article 269A. Article 269A deals with IGST and article 279A deals with GST Council. Don't confuse yourself. Clear? I repeat again. Article 269A deals with concept of IGST and article 279A deals with GST Council. Now, under article 269A of the Constitution, the GST on supplies in the course of interstate trade or commerce shall be levied and collected by Government of India. Such tax shall be apportioned. Apportioned means what basically? Shared between the union and the state in the manner as may be provided by the Parliament by law on the recommendations. Obviously, recommendations are given by whom, sir? GST Council. That's for sure. So basically, IGST amount is collected by central government and certain amount they'll share with the states. And how much amount they'll share, it depends in the manner provided by Parliament on the recommendation of the Council. And in our syllabus, they did not keep it as a point for us to know how much they'll give to each state. Because they have got a working ratio model based on the situation where they'll take a decision how much to be shared with the state. Then, rates of GST. CGST and SGST would be levied at the rates to be jointly decided by center and state, and the rate would be notified on the recommendations of GST Council. On the recommendation of GST Council. And the maximum rate of CGST is 20%. 20% is the maximum rate of CGST. Now student will ask, so practically I saw 28. My dear friend, 28 is because 14 plus 14. 14 is CGST, 14 is SGST. So maximum rate in CGST is only 20. So SGST is again 20. So IGST rate can be maximum 40%. So practically if they want to increase the rate, they can't take the rate beyond 40%. So if they want to do that, subsequently there is a possibility where they might amend the law and do it. But as such, they straight away cannot do that. Next. Rate of IGST would be sum of CGST and SGST. Already we know this, guys. GST Council, we just discussed already. Then exemption for small taxpayers. Small taxpayers will be exempted if the aggregate turnover is up to 10 lakhs, 20 lakhs, 40 lakhs. In different cases, we have got different limits. Some cases, we have got a limit of 10 lakhs. Some cases, we have got a limit of 20 lakhs. Some cases, we have got a limit of 40 lakhs. So in different cases, we have got different limits. Which case, what limit, we'll talk in detail when I go to the chapter called registration. This 10 lakhs, 20 lakhs, 40 lakhs story is very interesting and very important, which generally keeps coming in the exam, which we'll talk in detail for sure. Clear, my dear friends? Next. Classification of goods and services, something important, friends. In case of goods, we have got a classification where we use something called HSN, which stands for Harmonized System of Nomenclature. Can somebody tell me how many digit code it is? Come on. HSN. How many digit code? Somebody is saying 15 digit. My dear friend, 15 digit, that is not a code. That is GST identification number. Good. Majority are giving the right answer. Some are saying 10. No, my dear friend, it's actually 8 digit code. HSN is basically 8 digit code. And HSN full form is Harmonized. It's there actually there. You can see that. Harmonized System of Nomenclature. HSN stands for what, sir? Harmonized System of Nomenclature. HSN how many digit code? 8 digit code. And in services will be classified as per service accounting code. Now can somebody tell how many digit is service accounting code? 4. 6. Now next somebody will tell 8, I guess. 4. Many are saying 4. But let me tell you guys, answer is 6. HSN is 8 digit code and SSC is a 6 digit code. And an interesting point I'll tell you now. Generally, sir, whenever we go to a shop or supermarket or somewhere and procure some goods, one thing which you guys should know very clearly is that whenever you procure some goods or something, you get something called invoice. We all know that, right? In case of invoice, guys, we all know that whenever we procure goods or something, we actually get something called invoice. In invoice, we find something called HSN code, which stands for what? Harmonized System of Nomenclature. And I'm not really sure whether you guys observed or not, but it's actually there. In every invoice, generally you'll find that. But it does so happen that in small shops, they give invoice, but you don't get to find the HSN code. Why? I'll tell the reason. Government gave a small thing here. See that once. Taxpayer whose turnover is below 1.5 crores. Below how much, guys? 1.5 crores are not required to mention HSN code in their invoice. They're not required to mention what? HSN code in their invoice. And taxpayers whose turnover is above 1.5 crores but below 5 crores shall use 2 digit code. Now question which comes is, sir, when you told 8 digit code, which two should I use? First two or last two? Let me tell you straight away, the answer is first two, always. Taxpayer whose turnover is more than 5 crores, they shall use 4 digit code. Now you'll ask one question, sir, who will use 8 digit code? So it's not that we are not telling don't use 8 digit. If you use 8 digit, we are more than happy. But we are telling that if your turnover is not more than 1.5 crore, it is not necessary to show HSN code. And if it's more than 1.5 crore, does not exceed 5 crores, you must definitely show 2 digit code. And if it's more than 5 crores, you must show 4 digit code. That's very clear. Next. Service accounting code is 6 digits. Imports. Imports we treated as interest rate supply, IGST is the way. And already we know that for imports we will charge BCD plus IGST. One question from Karthik, an interesting question. This turnover in preceding financial year, sir. Yes, exactly. This 1.5 crore, 5 crores and all what we look at is preceding financial year. If turnover during preceding financial year does not exceed that particular limits, then current year will follow this. Obviously, because current year is still in process. So these limits, whatever 1.5 crore, 5 crore, whatever I told is based on preceding financial year. That's very clear. Next. Exports, technically called zero rated supplies. They will have an option either to pay tax on output and claim refund or export under a bond or LUT without payment of tax. Something very important. We will talk this concept in detail when I go to the topic called refunds. And already I told one point very clearly that government actively encourages exports and actively discourages imports. So on exports, they give us good benefits. We have got a concept called LUT, which stands for letter of undertaking. That's where we have a concept called exports with payment of tax, exports without payment of tax. What is that? We'll talk in detail soon when I go to the topic called refunds. Next. Dispute resolution. Already I told Constitution 101 Amendment Act. Which year? 2016. 122nd is Bill. Act is 101. Kishore is asking a question. Dash concept under central excise duty is there or not under GST? There is something called dash, double dash, triple dash. That is also there in GST also, but that's not a part of your syllabus. That we'll discuss in customs. Don't worry. In customs, there's a topic called classification. There I'll tell you that. Then, Constitution 101 Amendment Act provides that GST Council shall establish a mechanism to adjudicate any dispute between the Government of India and one or more state, Government of India and any state on one side, and one or more states on the other side, between two or more states arising out of recommendations of the Council or implementation thereof. So if any issue comes, they'll settle the issues. Don't worry. You do not take so much effort. Sir, how will they settle? How will they manage? Don't worry. Don't worry. They'll definitely settle the disputes and they will definitely do that dispute resolution. Next, compliance rating is one section called 149, which talks about compliance rating. They told on a scale of 10, they'll give a rating to every registered person under GST law based on compliance, what he is doing. That is based on how he is complying with the law, whether he is paying taxes on time, filing returns on time. Based on all these parameters, they'll give a rating on a scale of 10. And that rating will be publicly available. As on today, practically it's not happening, but practically we have some concept where actually we can go online and check basically as to whether that particular person has filed returns or not. Under GST portal, when we click search GSTIN, we can see whether that person has filed his GST returns or not. That's definitely possible. Clear, friends? Based on how he's complying with the law, they are going to give a rating. They are going to give a rating on a scale of 10. And they'll make it publicly available. And they're going to announce it. Next, anti-profiteering measure. Something super important dealt by section 171. What is that? Sir, one point I'll tell you, sir. When GST law starting it has come, in case of restaurants, sir, they told AC 18%, non-AC 12%. This is what they told. Later, they changed. Any hotel or restaurant, straight away GST is 5%. This is how they changed. Now I'll ask you one question, guys. Why did they reduce the rate of GST? And the purpose of reducing GST is what? The fundamental purpose of reducing the rate of GST is to ensure that consumer will benefit. Yes or no? Right. But what people started doing is, in a coffee shop, when the coffee is 100 rupees, 28% is the GST component. Okay. 18% is the GST component. Total was 1 each. And when the rate of GST became 5%, they kept this 118 only, made this 5. This they made 103. Just an example. That means if you observe, is there any change in the price of coffee? 101%, the coffee price has not changed. Only thing what they have done now, this let me make it as 113. Only example, don't try to calculate now 113 to 5%. That will not match. That's only an example, please. Come on. So 113. So technically if you observe, 100 rupees coffee price became 113. So if you observe, the rate reduction in the GST is not being passed on to the consumer. It's being made as a profit by the businessman. So businessman is actually enjoying the rate reduction. That's where what they have done is, they have set up one committee called Anti-profiteering Committee. Now what does this committee do? This committee is one such committee which will actually check and they'll monitor whether any benefit given on account of GST has been passed on to the end consumer or not. Recently also, big companies, Hindustan Unilever, Johnson & Johnson, big companies have been caught by this anti-profiteering committee and a good amount have been taken from them where they could trace that they could not pass on the benefit to the consumer. A question might come from a student where they ask, sir, what if coffee price goes up? Now what this anti-profiteering committee is doing is, what was the cost before? What was the cost later? When all the costs were same, why did the rate suddenly go up? They have their own calculations how they'll catch. You don't worry about how will they calculate and catch. That is their responsibility. And the ultimate job what they'll do is they'll basically make sure and ensure that any benefit on account of GST will be passed on to the end consumer and will not be enjoyed by the businessman himself. That's the whole idea of this. Next. See that? Any reduction in the rate of tax on supply or benefit of input tax credit shall be passed on to the recipient by way of commensurate reduction in price. Come on, sir. By way of commensurate reduction in price. That's what they're trying to do. Next. An authority may be constituted by the government to examine whether input tax credit availed by the registered person or the reduction in the tax rate have actually resulted in commensurate reduction in the price of the goods or services or both supplied by him. Next point, guys. Manner of utilization of credit. Something very important, which most of you would have already heard. Something very important. Please look at that. This concept is dealt by section 49, 49A, related with rule 88A. Very important. Come on, see now. CGST credit, SGST credit, IGST credit. CGST credit, first we'll utilize for CGST, then we'll utilize for IGST. SGST credit, we'll first utilize for SGST, then utilize for IGST. But always keep in mind, we cannot utilize CGST credit for SGST, SGST credit for CGST. Cross utilization of CGST credit and SGST credit is not allowed. That's very clear point. But always keep in mind that CGST credit to be first utilized for CGST, only then for IGST. SGST credit to be first utilized for SGST, only then for IGST. The last one is very important. Please note that very clearly. Super duper important. IGST credit. IGST credit should be first utilized for output IGST only. I repeat one more time. IGST credit should be first utilized for output IGST, then for CGST or SGST in any order or any manner. When I say any order or any manner, what does that mean? Let's say I've got IGST 100 rupees. This is input tax, ITC. Okay. So what they're telling is, first this 100 rupees, use it for output IGST. First, number one. Then use it for CGST or SGST in any order or any manner. Why did I say any manner? Any manner I told because you can use it half CGST, half SGST, or 60-40, 70-30, 30-70, whatever ratio you want, you use it. That's left to your choice. So let's say output IGST is 30, CGST is 40, SGST also obviously 40. So it's 100 rupees, first you'll use it for, I repeat one more time, this 100 rupees, first you'll use it for output 30 rupees, that's for sure. Next, balance 70, whatever you have, you can use it in whatever proportion you want. Either for CGST first or SGST first or both half of, in whatever way you want, you can set off. I hope we are clear with this point, everybody. So friends, come on, going back to the discussion now. IGST credit to be first utilized for output IGST, then for CGST or SGST in any order or any manner. That's a very clear-cut point. Credit of CGST and SGST, I repeat one more time. Credit of CGST and SGST to be utilized, this point is very important, sir. Only after IGST credit is fully exhausted. What does this point mean? Please guys, I think some of you already know this, but others, kindly please concentrate. Very important, sir. Please listen. Sir, under input tax credit, I have IGST, let's say 100 rupees. CGST, some 60 rupees. SGST also obviously 60 rupees. Correct? Now what law is telling is that output could be anything. Output could be anything. Anything means any type of tax, whatever it is. But first what law is telling is, very clearly what they told one point is that output could be anything. But before you touch using this, before you start using this, I mean to say, before you want to use CGST, SGST credit, first completely exhaust this. Completely exhaust IGST credit. I repeat one more time. Completely exhaust IGST credit. Only then you use CGST and SGST credit. That's what they are trying to tell. So that's a very interesting point where they clearly told that CGST, SGST credit to be utilized only after IGST credit is fully exhausted. That means unless IGST credit is fully over, don't touch CGST, SGST credit. That's the point there. Please keep that point in mind. Coming back, see now, credit of CGST, SGST to be utilized only after IGST credit is fully exhausted. Then second special point, credit of SGST to be utilized for output IGST only after credit of CGST is exhausted. Now what does that mean? Listen, let me clarify that point. So let's say you have input IGST also, CGST also, SGST also. Let's say this is 50, this is 30, this is 30. You have got to pay output IGST. Let's say you have got to pay output IGST of 200 rupees. What will we use first, sir? First, obviously, you use IGST credit of 50. Of 50. Kishore is asking one question. Completely exhaust against which one? Kishore, that's what I told. You can use IGST credit. First, you have to use it for output IGST. Then use it for output CGST or SGST in any order or any manner. But what is the special point I am telling you is that when you start utilizing your input tax credit, first completely utilize your IGST credit. Only then you start utilizing your CGST, SGST credit. That is the point I am trying to communicate to you. I hope you are clear, Kishore. Done. So friends, if output IGST is 200 and input tax credit, first what will I use? Come on, IGST I'll use first. 50 I'll set off. Obviously because, Kishore, come on, observe here. CGST, SGST credit I will not touch first. What I will touch first? IGST credit. IGST is how much? 50. IGST is completely gone. What are the balance left now? CGST, SGST. Now my question to you is, can I use CGST credit for output IGST? Yes. Can I use SGST credit for output IGST? Again, answer is yes. But what I should use first? That is the question. The answer for that is, first use CGST credit 30. Then use SGST credit 30. Balance figure is 90. Student is asking, so whatever you write, still the answer is 90 only. No. Still the answer is 90 only, but doesn't mean it is correct. Always keep in mind, balance sheet tally doesn't mean answer is right. If you do two adjustments wrong, double enter system, balance sheet will tally. So balance sheet tally is not the objective. Doing it correctly is the objective. Come on. Read that special point once again. Come on. See that? See that special point? Credit of SGST to be utilized for output IGST only after credit of CGST is exhausted. So when you are paying output IGST, I will open that once again. When you are paying output IGST, first you use, anyways, you use your IGST credit. Then after that, use CGST credit first. Then only use SGST credit. Could be a small point, but turns out very important. Because any small point can become a question in the exam. See a finding. Come on. Next. Moving forward. New article 366. Already we discussed this. We covered what is GST already. Service. We'll talk in detail when I go to the concept of supply. Don't worry. State, I just defined what is state. State also includes a union territory with legislature. And what is this deemed sale? We'll talk when I go to the concept of supply. In supply, we'll discuss in detail what do we classify as supply of goods, what do we classify as supply of services. There we'll talk in detail what do we classify as supply of goods, what do we classify as supply of services. Then we have a question from Chaitanya. Is there any chance of asking new article 366 in exam? Sir, definitions. Definition, they may not ask everything, but you definitely need to know definition of 366 This is very important actually, because it defines what is GST. This may come in the exam. You need to know that GST means a tax on supply of all goods or services or both, except alcohol, liquor for human consumption. That's very important. Hope you are clear. Thank you. That's about our first topic, which deals with discussion about the introduction to GST. I hope all of you are very clear with this introduction to GST. Let's do something, guys. Now let's take a minute time to recall once what we discussed now. Introduction topic, the most important key areas we need to know is about utilization of credit, the story of GST, how GST has come into the picture, and how the things have evolved. That's very important points. A question can come in the exam. High possibility a question can come. Please be very clear on that. We have a question from Kishore. Can I use CGST input against CGST output? If there is unexhausted IGST ITC after utilization against IGST output. Okay. Kishore, consider it please. Input IGST you are saying 70. Output IGST let's say 50. CGST 30. SGST 30. This is what is the question? Out of 70, 50 utilized. What is the balance left? Balance is 20. Now you are asking if output CGST is let's say 40. What I should use first? Whether I should use CGST or I should use IGST. And that is what I understand by your question. Now let me tell you very clearly that you should not touch your CGST SGST credit. Don't touch CGST SGST credit unless IGST credit is fully exhausted. So obviously first I'll use this only. Then only I'll use this. That is, IGST credit should be first fully utilized. Only then you touch CGST credit or SGST credit. That is what is the concept. I hope you are clear. Thank you. Let's do something, guys. Let's hold on for 2 minutes. I'll also just drink some water and come back. Just give it 2 minutes. Maybe after 5 minutes exactly, we can start the next session on discussion about time of supply. Can you now open your presentation of time of supply, guys? Just keep that handy, keep it ready with you. So friends, we have just spent some good time on discussion about the introduction to the basic concepts of the GST, which is very important, which generally keeps coming in the exam. So now, my dear friends, moving forward, when we talk about this topic called time of supply, first thing, do you really think this time of supply topic is important? 101% answer is yes. Time of supply is definitely important. Why? I'll ask a question now. Students will say, sir, for sure, because 4 marks will come in exam. Now let me tell you guys, time of supply is important not just because that 4 marks or 6 marks will come in the exam. Not just because that 4 marks or 6 marks will come in the exam. That's because time of supply is very important and very practical. I repeat one more time. Time of supply topic is a very important topic for a simple fact and reason that it's not about 4 marks or 6 marks. It's something which is very practical, where the thought process is very much involved when trigger point will come for the purpose of payment of tax. We all know the straight point that first thing, let me tell you guys that due date for payment of tax is generally what, my dear friends? Come on. Is generally what? What is the due date? You can reply by typing there. I can see your chat. Don't worry. Don't think how to interact with me. Good. Majority already gave the answer. Let me tell you the due date for payment of tax is 20th of next month. That's a straight clear-cut point. That is, the due date for payment of tax in general is 20th of next month. Exception is there. That is in case of composition scheme where we pay tax on quarterly basis. By 18th of quarter ending, we use one special form called CMP08 and pay that. But in general, the due date for payment of tax is 20th of next month. And 1-2 friends are saying it's 22nd, 24th and all. That's practically happened based on the state-wise, they change little bit of due dates. But generally the answer is 20th of next month. That is the straight clear-cut answer in general. In exam, please don't go and write 22nd, 24th, I'm from Orissa, I'm from Andhra, for me 22nd. Please don't write that in the exam. Please straight away write 20th of next month in the exam. Please don't write state-wise answers for this particular thing because that's not applicable for the exam. For the exam, it's straight away 20th of next month. Yeah? Come on. So now, when we say 20th of next month, guys, practically what we do is, we have got one form called GSTR 3B. People always say this is a return, but I say it's a return cum payment. So I'll ask you one question. Can we file income tax return without payment of tax? Can we file income tax return without payment of tax? 101% my answer is yes. Because income tax return can be filed even without payment of tax. But our GST return cannot be filed without payment of tax. Government has smartly linked the concept of payment of tax with the return. That's why, because in GSTR 3B when we open, unless we actually set off our liability, we cannot file our return. So it's very clear that we need to pay the tax for sure in order to file our return. Both are being integrated together. Now, an interesting point I have is, let me give an example here. Let's say there is Shiva Teja here. I supplied, obviously, we will not say provide. I supplied services. Let's say to one person called Mr. X. When I supplied service, let's say I supplied services on 10th August. And after that, what I have done is, I have given invoice on 4th September. And X has made payment to me on 5th October. So friends, if you observe carefully, month-wise, if you look at, I repeat one more time, month-wise you look at, instead of looking date-wise, which month service is given. I repeat one more time, instead of looking at date-wise, if you look at month-wise, which month service is given? Service is given in the month of August. Invoice is given in September. Payment has come in October. And from Shiva Teja's point of view, the due date for payment of tax is 20th of next month. Due date for payment of tax is 20th of next month. Now, if I take August as the base, 20th of next month becomes 20th September. If I take September as base, it becomes 20th October. Correct? And if I take October as the base, it becomes 20th November. That's very interesting actually. So friends, if you observe very carefully here, the interesting point to be noted is that, come on, service is given when? August. Invoice is given when? September. Payment has come when? October. So these three are in different months. So now, generally, when we say August month service is given, invoice is given in September, payment has come in October, generally the due date for payment of tax is 20th of next month. 20th of what we need to see? That is what is the whole question. Should I see invoice date? Should I see service date? Should I see payment date? Which date should be considered? Which date should be considered? That concept is dealt by this beautiful topic called time of supply. That is why this topic called time of supply is very important, where we are going to talk in detail as to what is the time of supply, where we are going to discuss very clearly what is the trigger point for payment of tax. In fact, this particular topic called time of supply does not tell what is the due date for payment of tax. That is 20th of next month, which is very clear. But time of supply topic clearly tells us what is the trigger point. That is when the point in time the liability to pay tax will arise. So if you look at from Shiva Teja's point of view, I will tell 5th October is better for me because that is when I got payment. But practically it won't happen like that. Practically it happens many times that we end up paying tax before itself, even without receiving payment. Even without receiving payment, many a times we end up paying tax practically. So it's very important to know us that we have to pay tax at certain occasions where even though we don't receive that money. So that's important for us to understand. Are we clear, my dear friends? So that's where this topic is very important, which is known as time of supply. Let's discuss that and spend some time. Come on, guys. This concept called time of supply is divided into 3 sections, my dear friends. Section 12, Section 13, Section 14. Section 12 deals with time of supply related to goods. 13 deals with time of supply related to services. Come on. 12 deals with what, sir? Time of supply related to goods. 13 deals with what? Time of supply related to services. 14 deals with time of supply related to change in rate of tax. This is pretty simple and easy. We'll talk in the last. More time taking is only services. Goods will take little time. And one point, let me tell you, my dear friends, which is very interesting is that in section 12, we have got 12.1, 12.2, 12.3, 12.4, 12.5, 12.6. And in 13 also we have got 13.1, 13.2, 13.3, 13.4, 13.5 and 13.6. Now why did I write this here? I'll tell you. 12.4, 13.4 both are same. 12.5, 13.5 both are same. Now when I say same doesn't mean I will not tell the concept. Same means we are going to discuss the concept. But in both goods as well as services, the concept is same. 12.6, 13.6 also concept is same. So we'll learn them together. 12.4, 13.4 we'll discuss together. 12.5, 13.5 we'll discuss together. 12.6, 13.6 also we'll discuss together. Are we clear? And 12.3, 13.3 both are altogether different, but both of them deals with the same concept called RCM. That's nothing but reverse charge mechanism. RCM stands for what? Reverse charge mechanism. And 12.2, 13.2 is basically general rule. Even that is also very important. Even that will spend some good time and talk in detail. Next. 12.1, 13.1, they do not say anything. They just say one word called the liability to pay tax. I repeat one more time. 12.1, 13.1 only says the liability to pay tax shall be as per time of supply. That's obviously very clear that our liability to pay tax shall come only as based on time of supply. 12.1, 13.1 says, I repeat one more time, the liability to pay tax shall be as per time of supply. That is what is this concept. The liability to pay tax shall be as per what, my dear friends? Time of supply. That is what is told by 12.1 and 13.1. So it's very important for us to know what is 12.2, 13.2. All that we'll talk in detail. Are we clear, everybody? Come on, let's start. Please pick up your handout, friends. Time of supply, section 12 to section 14 of GST Act. I have a question from Sai Sudhir. Sir, remembering all the sections is compulsory? Yes, my dear friend, 100% compulsory. Because CA final level, ICI expects you to answer section numbers in the exam. Right. Now, time of supply related to what, sir? Goods. Time of supply related to goods. Time of supply shall be date of invoice. But before I discuss that in detail, I want to look at this third box which is there in the bottom, sir. Come on, please see that once. Prior to 15 November 2017, time of supply was date of invoice or date of payment, whichever is earlier. I repeat one more time. As per section 12.2 general rule, once upon a time of supply was date of invoice, date of payment, whichever is earlier. This was the concept once upon a time. Once upon a time, the concept was very clearly date of invoice or date of payment, whichever is earlier. Sudeep is asking a question. Subsections also, it's not mandatory, but preferably if you write, it's better. Come on. Section 12.2, date of invoice or date of payment, whichever is earlier. That is generally the concept. Once upon a time, up to 15th November 2017. With effect from 15th November 2017, the concept got amended where they straight away told time of supply is date of invoice, date of payment is irrelevant. Date of payment is what, sir? Irrelevant. Straight away the answer is date of invoice. Straight away the answer is date of invoice. Now when they clearly told date of invoice, that means the trigger point for payment of tax will arise only at the time of invoice. Payment will not trigger the payment, date of payment will not trigger the time of supply. That is where we always say that on advances, on what, sir? Advances, we do not pay GST. I repeat one more time. On advances, we do not pay GST in related to goods. Only goods, I repeat, my dear friends, only goods. If it is service, on advances, we do pay GST, but if it is goods, on advances, we do not pay GST. That's very clearly because time of supply directly answer is date of invoice. That means unless invoice is given, time of supply will not arise. So if invoice is given only, time of supply will come. Till the time invoice is not given, time of supply will not come. So government thought there is a high possibility where people might play a game on this. What game they might play? There is a possibility where they might supply goods and don't give invoice only. They might supply goods and don't give invoice only. Or they give invoice late. They don't give invoice only, or they give invoice late so that they can defer or postpone the payment of tax. There's a high possibility somebody can do that. High possibility like that. So what government told very clearly is that a beautiful line they drafted. Come on, read that line there. Time of supply shall be date of invoice. And date of invoice means what, sir? Actual date or last day when invoice is ought to have been issued under section 31, whichever is earlier. What a beautiful language. Observe that word called whichever is earlier. Very beautifully given that word called whichever is earlier. Come on. Actual date of invoice or last day when invoice is ought to have been issued under section 31, whichever is earlier. Now the big question which comes up is, what is the last date when invoice is ought to have been issued under section 31? That's what we have to talk now. Come on. That's where I gave the second box below. See the box, come on. Due date for issuance of invoice by supplier. See that, come on. Non-continuous supply involves movement. Time of removal of goods for supply. Time of what, sir? Removal of goods. Now, what is that? Let me give a clarity on this by giving an example case. Let's say there is one person called Mr. X. He is a biscuit dealer. Come on. He's what dealer, guys? Biscuit dealer. Now, what X has done is, X has supplied biscuits to Mr. Y. He supplied biscuits on 10th April. He supplied biscuits on 10th April. When did he supply? 10th April. 10th April is actually when he supplied the biscuits. And X has given invoice to Mr. Y. And invoice date is 6th May. That means biscuits are supplied on 10th April. I repeat one more time. Biscuits are supplied on 10th April. One more time I repeat. Biscuits are supplied on 10th April and invoice is given on 6th of May. Now why did this gentleman give invoice on 6th of May? He gave invoice little late thinking that time of supply is date of invoice. Time of supply will become May. My due date for payment of tax will become 20th of June. I can happily postpone payment of tax by issuing invoice late. By issuing invoice late, I can postpone my payment of tax is what X has thought with his extraordinary brain. But Lord told, my dear X, control. Yeah, control. Even though you actually gave invoice on 6th of May, time of supply will definitely be 10th April. Time of supply will still definitely be 10th April only. One more time I repeat. Even though invoice is given on 6th of May, time of supply will still turn out to be 10th April only. For a simple reason and fact, that's very clear that time of supply will be actual date of invoice or last day when invoice is ought to have been issued under section 31, whichever is earlier. And this is basically a biscuits which involves movement of goods. And in case of movement of goods, invoice must be issued on or before the date of removal. When are the goods removed? 10th April, the goods are removed. 10th April, the goods are removed and actual invoice date is 6th of May. That means invoice actual date is 6th of May, but invoice is supposed to have been issued on 10th April. Supposed to be issued on 10th April, actual date 6th May. These two, whichever is earlier. That becomes my time of supply. That is an interesting concept, which you should have a tremendous clarity on. Because people still have a thought process that I'll postpone issuing invoice so that I'll postpone payment of tax. I'll happily enjoy and relax. Like that they think. But let me tell you, that's not possible. You cannot do that. Are we clear, my dear friends? So time of supply is what, sir? Date of invoice. So friends, what is time of supply? Date of invoice. And date of invoice means what? Actual date of invoice or last day when invoice is ought to have been issued under section 31, whichever is earlier. Come on, let's go back. So we see there, if it involves movement, what is the answer? Time of removal of goods. Non-continuous supply, other cases, delivery of goods or making available to the recipient. There is a case where supply does not involve movement of goods. If there is movement of goods on or before date of removal. No movement of goods on or before date of delivery or making available. This is practically common in case of furniture. Wherein let's say at some fixed place, I've got some furniture. That furniture I supply to you. but that is not being moved by you, neither by me. You actually came and occupied the furniture. So this is the case where there is no movement of goods. So if there is a movement of goods, invoice must be issued. If there is a movement of goods, invoice must be issued on or before a date of removal. And if there is no movement of goods, invoice must be issued on or before a date of delivery or make available. That's an interesting point. I'm sure it makes sense for everybody. Next. Continuous supply. So when I talk about continuous supply, what is continuous supply of goods? Continuous supply of goods basically means supply of goods under a contract on recurring basis, which we technically call continuous supply of goods. In fact, this word called continuous supply of goods is defined by one section called 232. 232 clearly says continuous supply of goods means supply of goods under a contract on recurring basis. On recurring basis, goods are supplied under a contract. Now, this practically we see, especially in case of construction sector, sir. I know one of the person who is basically a cement dealer. This man has got tie-up with 3-4 construction companies. Construction company keep calling and telling, keep on sending cement bags. Today 10, tomorrow 10, today 5. They keep calling, this man will keep sending. And periodically he will ask for payment. It's not that every bag he will demand for payment. So for continuous supply, what they told is date of issue of statement of account or receipt of payment. Date of issue of what? Date of issue of statement of account or receipt of payment. Whatever we are learning here is all about time limit for issuance of invoice. And that's important. That's important for the reason because time of supply is date of invoice. And date of invoice is actual date of invoice or last day when invoice is ought to have been issued under section 31, whichever is earlier. One student is asking a question. For this continuous supply, still payment assumes significance. Yes, there is significance. Significance for payment is not about significance given to that payment. Receipt of payment is the time limit for issuing invoice. So indirectly it has an impact on invoice only. So our key term is not about payment. Our key term is all about invoice. And for invoice, that time of supply will be actual date of invoice or last day when invoice is ought to have been issued, whichever is earlier. And last date ought to have been issued is given by section 31. And in 31 different cases, we have got different time limits. Next. Sale on what basis now? Approval basis. Sale on approval basis means what? Goods sent on approval basis. Very common. Sale on approval basis. So what they told earlier of time at which it becomes known that supply has taken place. Come on guys. In case of goods sent on approval basis, when supply will take place? Obviously supply will take place only when the recipient has approved it. When he approves only, supply actually takes place. So earlier of the time at which it becomes known that supply has taken place, or second thing is what? 6 months from the date of removal, whichever is earlier. 6 months from the date of removal, whichever is earlier. So friends, what is the answer now? Earlier of time at which it becomes known that supply has taken place, or 6 months from date of removal. This box is very important to know that time limit for issuance of invoice. And time limit for issuance of invoice is important because time of supply is date of invoice, and date of invoice will in turn have an impact on actual date or last date, whichever is earlier. Another question. Advance received for continuous supply becomes time of supply. Okay. So let me give a small situation here. See, let's say in case of continuous supply, some payment has come. When some payment has come, in case of continuous supply, that supplier is required to issue the invoice. So they are required to issue the invoice, and there could be actual invoice date also. Those two, whichever is earlier. So that is the way we are handling it. We are never going to tell date of payment is time of supply. That is impossible. Time of supply is always date of invoice, which could be actual date or last date, whichever is earlier. And last date depends upon section 31. That is what you have to observe, my dear friend. I hope you are clear. Done. Next. The last box, guys. Prior to 15th November, time of supply was date of invoice, date of payment, whichever is earlier. Hence, with effect from 15th November, no GST is required to be paid on advances received for supply of goods. Obviously, no question of payment of GST on advances. On advances, there is no question of payment of GST. But keep in mind, on advances, no GST only in case of goods. If it is services, on advances, we end up paying GST. Why? How? We'll talk in service very, very soon now itself. But for goods, we never ever pay GST on advances. Another question from student. Even for installment payment, it depends upon invoice value only. Good. If payment comes in parts, we'll determine time of supply in parts. I've got some illustrations and examples. We'll talk. Don't worry. Come on, see guys. Look at the example one. Invoice raised before removal. Invoice raised when? Before removal. Invoice date is what? 10th March. Due date for invoice is what? 20th March. Payment 26th March. Supplied. There's a payment by suppliers. Credit in bank 30th March. But let me tell you, these two are irrelevant. The only thing relevant for us is invoice date, due date, these two, whichever is earlier. And what is earlier, sir? 10th of March. That becomes time of supply. Next case, and so these two are irrelevant. Only these two are relevant. 20th March, 30th March. So answer becomes 20th March. So basically we observe payment becomes irrelevant. Only thing becomes relevant is invoice. So now let's take a small example here for benefit of our friend. Let's say invoice date 10th August. Last date 12th August. That means we are so smart. We gave invoice before only. What is time of supply? Obviously 10th August. Now let's say payment came on 2 dates. First payment came on 6th September. Second payment came on 4th July. What is the point? Now here, just because payment came before invoice, now we observe what is happening here. Time of supply is what? This date, whichever is earlier, which straight away becomes 10th August. Payment came on 6th September, irrelevant for us. Payment came on 4th July, irrelevant for us. Because only thing relevant for us is invoice date. Payment is coming before invoice, payment is coming after invoice is irrelevant for us. Only thing relevant is date of invoice, which is actual date or last date, whichever is earlier. That's it. I hope we are clear. That's all. Next. Moving forward, friends. Another example, see now. This example is on continuous supply. Contract provides for what? Successive payment of accounts or successive payments. That's why it's called continuous supply. Invoice date 1st March. Statement of accounts or payments due date 5th March. So these two, whichever is earlier. So what is the answer then? 1st March, 11th or 5th, 5th, 8th, 15th. But if you observe, one small point I'll tell you here is in this case. The third case is very interesting. Statement of accounts or payment to due date. Payment due date is what? 5th April. But receipt of payment came when? Receipt of payment came on 1st April. When receipt of payment came on 1st April, invoice is supposed to be given on 1st April. And actual invoice date is 8th April. These two, whichever is earlier, became 1st April. Now, just because I told 1st April in this example, you should not tell that payment date became time of supply. Payment date did not become time of supply. Receipt of payment is a relevant date for issuing invoice. And actual invoice date is 8th April. Those two, whichever is earlier. I hope you are getting clarity, guys. Now, I'll go back once again. See here. See, very clearly we wrote that word. In case of continuous supply, date of issue of statement of account or receipt of payment. So basically we will see when we gave the statement, when we got the payment. That is the time when we are required to issue the invoice. That is the time when we are required to issue the invoice. And we'll also see when we actually gave the invoice. And those two, whichever is earlier, that becomes my time of supply. I repeat one last time, in exam I really don't want you guys to go and write date of receipt of payment became time of supply. That is not the answer at all. Date of receipt of payment in case of continuous supply is having an impact on the time limit for issuance of invoice. That is in turn having an impact of time of supply. That is what is the answer. I don't want you to write the word called date of payment is time of supply. That is never the answer in section 12.2. Please. Are we clear? John, next. Time of supply in case of services, 13-2. So we'll complete 12-2, 13-2, 12-3, 13-3, then 12-4, 13-4. That's what we are going to talk. Don't worry. Next, come on. 13-2 is what? Time of supply in case of services in general. If invoice is issued within prescribed time, and prescribed time is what, sir, generally? 30 days. And 45 days in case of bank, insurance, financial institution or NBFC, non-banking financial corporation. Then date of invoice, date of payment, whichever is earlier. And if invoice is not issued within time, date of completion of service or date of payment, whichever is earlier. So in simple way, if invoice is given within time, date of invoice, date of payment, whichever is earlier. And if invoice is not given within time, date of completion of service, date of payment, whichever is earlier. That is what is the point. I hope we are clear with this, friends. So if invoice is issued within time, what is the answer? Date of invoice, date of payment, whichever is earlier. And if invoice is not issued within time, date of completion of service, date of payment, whichever is earlier. So to clarify more further, sir, in Shiva Teja's example, what I wrote starting, see this guys, come on. See this guys, come on. When did I give service? I gave service on 10th August. Invoice I gave on 4th September. That is 4th September invoice I gave means I gave within 30 days. So I gave invoice within 30 days. When I gave invoice within 30 days, come on guys, what does time of supply become? Date of invoice or date of payment, whichever is earlier. Therefore, my time of supply turns out to be 4th of September. That is what is the concept which you all should be very clear about. I'm sure it makes sense for everybody, sir. So time of supply is what, sir? Date of invoice or date of payment, whichever is earlier. Since invoice is issued within prescribed time. If invoice would not have been issued on prescribed time, within prescribed time, then time of supply would have become date of completion of service or date of payment, whichever is earlier. I'm sure we are getting full clarity on this point. So if invoice is issued within time, date of invoice, date of payment, whichever is earlier. And is not issued within time, date of completion of service or date of payment, whichever is earlier. Now one small point to clarify, sir. When I say date of payment always means date when payment is entered in books. Date when payment is what, sir? Entered in books. Or date when payment is credited in bank account, whichever is earlier. Date when payment is what, sir? Entered in the books, or date when payment is credited in the bank, whichever is earlier. Now, why did they give this concept? There's a practical reason for this, why they gave this concept, sir. Because, let's say, Shiva Teja provided service to a client, and the client made a payment by way of check. And the check has come to me, let's say on 9th April, I got the check. When I got the check on 9th April, in my books, I enter the payment received on 9th April only. But I sent the check to the bank after 1 week. On 16th I sent, and the check got cleared on 18th. So technically payment got credited to the bank on 18th. But I entered the books on when? 9th. So date when payment is entered in the books or date when payment is credited in the bank, whichever is earlier. That becomes date of payment. So please keep this point in mind, guys. Small concept, but very interesting and very important. So friends, to reiterate further, come on. What is the answer now? In case of services, if invoice issued within time, then time of supply will be date of invoice, date of payment, whichever is earlier. And if invoice is not issued within time, then time of supply will be date of completion of service or date of payment, whichever is earlier. Now guys, third case you see, in case both the above do not apply, student can get one doubt. Sir, why both cases will not apply? Possible. I'll tell you why. When? Possibility I'll tell. First case is the case where we are talking invoice given within time. Second case is the case we are talking invoice not given within time. Third case can be a case where invoice is not given only. Invoice is not given only. In that case, what will happen now? Date on which recipient, who said? Recipient. Date on which recipient shows receipt of services in his books of accounts. date on which recipient shows receipt of services in his books of account. That becomes time of supply. So if invoice is issued within time, date of invoice, date of payment, whichever is earlier, and it's not within time, date of completion of service, date of payment, whichever is earlier. And in case both do not apply, then date on which recipient shows receipt of service in books of account, that becomes time of supply. There's a question from a student asking about continuous supply. I'll talk about it. We already discussed about continuous supply of goods. We'll talk about continuous supply of services. A student is asking, can you give an example of a similar business? Similar business where they don't give invoice? That generally don't happen. Generally everybody gives invoice. Generally everybody gives invoice. That case we don't get to see where invoice details are not available only. But it might happen where somebody who's liable to pay tax but is not giving invoice, that situation can come. So there's a third residual point, what they kept in the law, which we don't get to see practically much. In exam, they'll directly give a question where they told invoice is not given only. That's possible. I hope you are clear. Better? Yeah. Next. Where payment is received in advance, supplier shall issue what documents, sir? Receipt voucher and not a tax invoice, but shall be required to pay GST. Now student will ask, sir, sometime back you only told we will not pay GST on advances, and again you are telling pay GST on advances. What, sir? What is that you are trying to do with us? Sir, let me tell you, I only told that we will not pay GST on advances, but that is only in case of supply of goods. In supply of goods only, we don't pay GST on advances. But if it is services, we are definitely required to pay GST on advances. But in case of advances, we never give an invoice. We give a document called receipt voucher. Are we clear, everybody? Ja. Next. Where payment of up to 1,000 is received in excess of invoice amount, then time of supply for such excess amount shall at the option of the supplier be date of issue of invoice. What does that mean? Let me tell you what is that. See now, sir. Let's say there is Airtel. Let's say there is Airtel. Come on, yes. Airtel has given a bill to a customer. Let's say Airtel has given a bill to a customer for, let's say, 700 rupees. How much bill they gave, sir? 700 rupees. When a 700 rupees bill has been given, I repeat one more time, Airtel has given a bill of 700 rupees. When 700 rupees bill has been given, customer straight away paid 1,000 rupees. Come on. When Airtel gave a bill of 700, customer paid straight away 1,000 rupees. Now, from Airtel point of view, did they get some excess amount, sir? How much excess they got? 300. Now, my question to you guys, is this 300 a tip given to Airtel? Absolutely no. It's not a tip, man. Come on. This 300 is only an excess paid by customer. It's an excess paid by customer to Airtel. Now, what will Airtel do with this 300? Next month when they give bill, at that time they'll adjust. Now, friends, if you observe carefully, this 300 what Airtel has got, it's like an advance for next month bill. Yes or no, my dear friends? Do you agree with this point? Definitely answer is yes. This 300 what they got is an advance for next month bill. Now, my question to you is, on advances, will GST apply? 100% answer is yes. On advances, GST will apply. If it is services, if it is goods, no. But if it is service, 100% GST will apply on advances. So on 300, GST should come, correct? But they gave a small benefit where they told that if excess amount is up to 1,000, in our case, what is the excess amount? 300. The excess amount is only up to 1,000 rupees. If excess amount is up to 1,000 rupees, then for such excess amount, you can pay GST subsequently when you give invoice. That means next month, when Airtel will adjust that 300 in the bill, that time Airtel can pay GST on that 300. That is what they told. So, I'll open that point once again. See that point, my dear friends. Where payment of up to 1,000, I repeat one more time. Where payment of up to 1,000, is received in excess of invoice amount, then time of supply for such excess amount shall at the option of supplier be date of issue of what, sir? Invoice. That means at the option they told. Why they will at the option? Supplier on the 300, if you want to pay GST right now, pay. We are more than happy. But if you want to pay subsequently, you can pay later also. when you give invoice, that time you can pay GST on the 300. So technically, strictly speaking, law gave a benefit. That is what you have to understand. Are we getting clarity on this point, my dear friends? Yes. Next. Moving forward. Prescribed time for issuance of invoice in certain special cases. This is what our friends were asking about continuous supply. A question from a student. This limit is per invoice per recipient, sir. I think he's asking about 1,000 rupees. 1,000 rupees is per invoice per recipient, obviously. Every invoice is separate only, right? This 1,000 is not per month, per annum and all. This 1,000 is for every invoice separately. Next. Prescribed time limit for issuance of invoice. Prescribed time limit is important to know because in case of services, if invoice is issued within time, date of invoice, date of payment, whichever is earlier. And if invoice is not issued within time, date of completion of service or date of payment, whichever is earlier. See now, in case where supply of service, what sir? Ceases. Supply of service, what sir? Ceases. Ceases means what? Stops. In case supply of service ceases before completion only service stopped. Why? There is a possibility where, let's say for a second, I called a painter and I told my dear painter, please paint the entire room I want you to paint in a fantastic manner. He told, yes sir, I'll definitely do it in the best possible manner. He has done a part of the painting, but after seeing that painting, I could not digest myself. Horrible work has been done. So I told him, my dear friend, please stop the work and get out. But before stopping, some work has been done, Moses. So to the extent of that work done, we'll issue invoice. See that word? In case where supply of service ceases before completion, invoice to be issued at the time of cessation. To the extent of supply made before such cessation. To the extent of supply made before such cessation, he will give invoice. Next. Continuous supply of service. Sir, this word continuous supply of service is actually defined by section 233. Sometime back what I wrote was 232. 232 was continuous supply of goods. 233 is continuous supply of service. And continuous supply of service means service given under a contract for a period exceeding 3 months. This is very important. Continuous supply of service means service provided under a contract on a recurring basis for a period exceeding 3 months. That's very important. Are we clear, friends? Now, if the due date for payment is ascertainable from the contract, if what, sir? Due date is ascertainable from the contract. That means in the contract we know when invoice should be raised. Practical examples here, in case of water purifier or in case of a refrigerator, AC, TV, fridge and all, we take something called AMC. AMC means what? Annual maintenance contract. Is it for a period exceeding 3 months? Obviously yes. That's why it is called continuous supply of service. So what they told is, if the due date for payment is ascertainable from the contract on or before due date of payment. Next. If the due date for payment is not ascertainable from the contract, you can see the difference here. This is not ascertainable. If it's not ascertainable on or before date of payment, observe the difference. Previous point, if the due date for payment is ascertainable on or before due date of payment. Second point, if the due date for payment is not ascertainable on or before date of payment. Last point, if it is linked to an event or milestone. If it is linked to an event or milestone. If it is linked to an event or milestone on or before completion of such event or milestone. On or before what, my dear friends? Completion of such event or milestone. That is what is the answer. Are we getting clarity, my dear friends? So if it's linked to an event or milestone, what is the answer then? On or before completion of such event or milestone. This is what is the concept. I hope we are clear with this point, everybody. This is the time limit within which invoice should be issued. And is given within time, DOI, DOP, whichever is earlier. Not within time, date of completion of service, date of payment, whichever is earlier. This is what is the concept of section 13(2). Look at a couple of examples, friends. Invoice raised before completion of service. Date of invoice is what? 10th March. Invoice due. Is invoice due relevant for us, sir? Invoice due is absolutely irrelevant. When invoice is supposed to be issued is actually relevant when we talk about time of supply in case of goods. Because time of supply will be, what's that? date of invoice, that is actual date or last date when invoices ought to have been issued, whichever is earlier. But in services, when invoice is supposed to be issued is not relevant, but it's relevant for one purpose. What is that one purpose? That one purpose is to ascertain whether invoice is issued within time or not within time. But invoice due is not directly relevant. Invoice due is not directly relevant for time of supply. But invoice due is relevant to ascertain whether invoice is issued within time or not. Come on. Invoice due when 20th March. Invoice date when 10th March. That was invoice issued within time. If invoice issued within time, what is the answer then? DOI, DOP, whichever is earlier. Now what is DOP in this case, sir? Payment suppliers account 26th March. Bank account 30th March. 26th March, 30th March, whichever is earlier. What is the answer? 26th March. Now 10th March, 26th March, whichever is earlier becomes time of supply. That's where the answer is 10th of March. Second case. 30th April invoice date. Payment due is when? 20th April. That means what is the answer? Payment. That means invoice is not issued within time. Correct, sir? Then payment 10th April is supplier's account. Creating bank account 30th April. Whichever is earlier becomes 10th April. 10th April becomes DOP. Moreover, that he only told advance received. Which advance received, that date only becomes time of supply. Obviously, for the reason and fact that on advances, we are required to pay GST. On advances, we are required to pay GST in relation to services. If it is goods, we don't pay GST on advances. Done. Yeah. So in case of goods, we do not pay GST on advances, but in case of services, we are definitely required to pay GST on advances. That's why our time of supply will change based on the dates involved. Next. Some more illustrations, guys. Continuous supply. Come on. Invoice date is what? 2nd February. Time of supply becomes 2nd February. Invoice date 17th, but as per contract it is 10th. Contract it is 10th. Now, date as per contract, what is given? 10th is the date as per contract. But actual invoice date when I gave 17th. That means if you observe, in case of continuous supply of service, what is the whole concept here? For continuous supply of service, invoice, if the due date for payment is ascertainable, invoice must be issued on or before, what's that? Invoice must be issued on or before due date of payment. Here, what is the due date of payment? 10th of February. And invoice is not issued within 10th of February. Then what is the answer? Then my answer becomes date of completion of service, date of payment, whichever is earlier. Completion of service could be 10th of February. That's where answer is 10th of February. Same lines. Third bit, payment is 6th Jan, which is advance. That only becomes my answer. Last case is similar to our second case. That's where the answer becomes 10th of February. So this is how we try to calculate our time of supply in relation to section 13.2. So basically, whenever you solve any question, you actually need to figure out the dates very perfectly. Because time of supply is not dealt by numbers. Time of supply has got nothing to do with numbers. Time of supply has got only to do with the dates. So you need to observe the dates very clearly, then you'll get your perfect answer. Are we clear? This is a very interesting slide, guys. Time of supply for goods or services under RCM. Now, guys, when I talk about RCM is nothing but what? Reverse charge mechanism, where supplier is not liable to pay GST, receiver is liable to pay GST. And RCM could be related to goods, RCM could be related to services. In your syllabus, you don't have list of goods covered under RCM, but you do have list of services covered under RCM, which I should already, some points like GTA service, legal service, sponsorship services. There are a good amount of services which are covered under RCM. Now the point is, in case of goods, it's dealt by 12.3, service is dealt by 13.3. Goods, what they told is, first point, date of receipt of goods. Please see when goods are come. Second, date of payment. We all know what is date of payment. Date of payment means date when payment is entered in the books or date when payment is debited in the bank. whichever is earlier. Some student will get doubt now. So sometime back you told created in a bank, now you are telling debited in a bank. What's happening? My answer is like that because sometime back I was talking about normal case, but now I'm talking about RCM. In RCM case, payment will not get credited, payment will get debited. For receiver, money will go, money will not come. Are we clear with that, my dear friends? So what are the dates what we have here? So in case of goods, section 12.3 deals with time of supply related to goods covered under RCM. Wherein the first one says date of receipt of goods. Second one, date of payment. Date of payment means what? Date when payment is entered in the books or date when payment is debited in the bank. Whichever is earlier. Generally, date of payment means date when payment is entered in the books or date when payment is created in the bank. But since this is an RCM case, we will not say when payment is created. We will obviously say when payment is debited. Date when payment is entered in the books or a date when payment is debited in the bank, whichever is earlier. So date of receipt of goods, date of payment. Third one, 31st day from date of invoice. These three, whichever is earlier, that becomes time of supply. Last one is what, sir? 31st day from date of invoice. Sir, if invoice date is 9th April, don't calculate 9th. Leave 9th. Leave 9th. Start calculating from 10th and see 31st today. Are we getting clarity, everybody? No. Services, what they told is date of payment, second, 61st today from date of invoice. These two, obviously, whichever is earlier, no doubt about it. In time of supply, obviously, they will not tell later because time of supply will actually get revenue to the government. They want it as soon as possible. That's where they told whichever is earlier. Are we clear, my dear friends? Done. So for goods, what is the answer, sir? Date of receipt of goods, date of payment, 31st day from date of invoice, whichever is earlier. And for services, date of payment, 61st day from date of invoice, whichever is earlier. So I prepared a small slide to give a clarity on this, sir. See the center box first. Where tax is liable to be paid on reverse charge basis, time of supply should be arranged to the following. First one, date of receipt of goods, applicable only for goods. Date on which payment is entered in the books or debited in the bank, whichever is earlier. Next, 31st today in case of goods, 61st today in case of service. These three, whichever is earlier. And one point what they told is, where it is not possible to determine time of supply, then the date of entry in the books of account of recipient. That means when recipient entered in his books of account, that becomes time of supply. That is actually like a residual point what they kept. Where if the three are not possible, then time of supply will be what, sir? Date of entry. Date of what? Entry in the books of accounts of recipient. That becomes time of supply. A question from student. Why in services not consider date of receipt of service? Date of receipt of service is not something which we can track like that. For a reason because goods are tangible in nature. We can record when the goods have come. Movement can be tracked. But in services, movement cannot be tracked. That's the only point. That's where they did not give importance for the date of receipt of service. Next. So friends, come on. In case of goods, how many dates we have? 3 dates. 1, date of receipt of goods. Second, date of payment. Third, 31st day from date of invoice. These three, whichever is earlier. And for services, we have got 2 dates. 1, date of payment. Second, 61st day from date of invoice. These two, whichever is earlier. That becomes my time of supply. Please calculate properly and do the exam. That's very important. Next. Below, I give an important point, sir. This is interesting. Please observe that. In case of what, sir? Import of services. Import of services means what? The person who is supplying services outside India, person receiving services in India. In case of import of service from an associated enterprise. Associated enterprise is like a related person. In your direct tax, you have got a topic called transfer pricing. In transfer pricing, they define this word called associated enterprise. One person who is directly or indirectly able to have a control or management or capital of the other enterprise is there in direct tax. In fact, GST also says, please refer income tax. Come on. In case of import of services from an associated enterprises, the time of supply will be date of what, sir? Entry in the books of accounts of recipient. Date of what? Entry in the books of accounts of recipient or date of payment, whichever is earlier. Date of entry in the books of recipient, that means when recipient recorded the entry in his books of account, or when date of payment, whichever is earlier. That becomes my answer. And this concept is given by second proviso to section 13(3) of CGST Act. We are in CGST Act only. So friends, 12(2) is what? Time of supply for goods in general. 13(2) is what? Time of supply for services in general. 12(3) is what? Time of supply for goods covered under RCM. 13(3) is what? Time of supply for services covered under RCM. I'm sure we are getting full clarity on these points. Moving forward, friends. Before I begin next point, let's once revise these points, guys. Come on. In 12, what we have? 12(1), 12(2), 12(3). 12(1) says what? The liability to pay tax. 12(1) says the liability to pay tax shall be as per time of supply. 12(2) is what? General rule. What is general rule answer? Directly answer is date of invoice. Once upon a time it was different, but now the answer is date of invoice. And date of invoice means actual date or last date when invoice is ought to have issued under section 31, whichever is earlier. Then 12(3) is what? Time of supply for goods covered under RCM. 3 dates. 1, date of receipt of goods. 2nd, date of payment. 3rd, 31st day from date of invoice. These 3, whichever is earlier. Then 13(1). 13(1) says what? The liability to pay tax shall be as per time of supply. 13(2). 13(2) says what? Come on. 13(2) says if invoice is issued within time, then date of invoice, date of payment, whichever is earlier. And if invoice is not issued within time, date of completion of service, date of payment, whichever is earlier. And please keep one point in mind, that special concept of 1,000 rupees is there, which will apply only for services. It logically won't apply for goods because in goods we don't pay GST on advances. On advances, GST will come only in case of services. Right. And within time for services, generally 30 days, 45 days for banks, NBFC, and special point to be noted is about cessation of services. Again, special point is about continuous supply of service. Then 13(3) is what? Time of supply for services covered under RCM. That's nothing but date of payment or 61st day from date of invoice, whichever is earlier. Sure. Now let's complete few small balance points which are left out, which are important. Come on. 12(4)(34). Time of supply of what, sir? Vouchers. We practically have got a lot of voucher selling companies. You would have heard one company known as Sorexo. And there's somebody called Ticket Restaurant. Like that, generally, a lot of this software employees and these guys keep getting this vouchers, sir. And the vouchers are sold. See, basically, what is a voucher? Voucher is nothing but a coupon. And how does this voucher get a value? And okay, let me tell you in technical terms, voucher is actually like a derivative which gets its value from underlying asset. For example, if I give you Book My Show voucher, what do you do with that voucher? You'll use it for booking some tickets on Book My Show. If I give you some Make My Trip voucher, you'll use it for booking some tickets on Make My Trip. If I give you one shirt voucher, you'll actually go and buy a shirt. So correct, my dear friends. So in this context, what they told is, in case of voucher, there are two types. One, supply is identifiable. Second, supply is not identifiable. Now, point is, supply is identifiable means what? We know what purpose the voucher can be used. For example, sir, let's say, if I give you a shirt voucher, what will you go and take with that? Definitely you'll go and take a shirt. Okay, could be full shirt, half shirt, t-shirt, whatever it is. Shirt is a shirt. It doesn't matter what kind of shirt, what color of shirt it is. For shirt, the GST rate is constant. Correct? Now let's say, if I give you a supermarket voucher, if I give you what, sir? Supermarket voucher. So technically you can go to supermarket. If I give you a supermarket voucher, you can go to supermarket and you can actually take any kind of good there in supermarket. But I don't know what will actually go and take. Because if you go and take a different product, different rate of GST will come. Correct, my difference? So what they told is, time of supply, there is a trigger point when GST will come. In case of voucher, if it's identifiable, then time of supply will be date of issue of voucher. The day when voucher is issued, that day only time of supply will come. That's obviously because supply is identifiable. So if supply is identifiable, time of supply will be date of issue of voucher. And if supply is not identifiable, then time of supply will be date of redemption of voucher. Date of what, sir? Redemption. Redemption means technically if I give you a voucher or supermarket voucher, when you actually go to supermarket and redeem that voucher, that time only time of supply will come. So till the time you go and redeem, my trigger point will not arise. So till the time you go and redeem, time of supply will not arise. So in case of voucher, if supply is identifiable, then time of supply will be date of issue of voucher. And if supply is not identifiable, then time of supply will be date of redemption of voucher. Small concept, but it's important. High possibility a question can come in multiple choice. Next. 12.5.13.5. Residual provision. This provision they kept in the law so that if somebody tells, I am not able to apply 12.2, not able to apply 12.3, not able to apply 13.2, not able to 13.3, so whatever it is, you might end up telling n number of excuses. So government told, my dear friend, all excuses keep aside, come to residual provision. So starting only line they told, where it is not possible to determine time of supply under any of the circumstances discussed, it should be determined as under due date for filing of such return. If periodical return has to be filed. Why has to be filed? Let's say there is a person called Mr. A, who is a registered person. Is a registered person required to file return? Yes. And you already know the due date for filing return. Already I told 20th of next month generally GSTR 3B is required to file the return. The due date only will become time of supply. So why they kept like this? Because if nothing is possible, some basis they should keep. No sir. Sir, if time of supply is not determinable because it's not covered anywhere, then they should come. No sir. A student can get one doubt. So practically when this can apply, I will tell you. Mr. A is a registered person, but he is doing business. He is making money. He is taking all money in cash. He is not giving invoice. We don't have payment details. We don't have invoice details. No details are available. Then you will tell, sir, we will see when recipient record in his books of account. That also is not available. Nothing is available. If nothing is available, some solution should be there, no sir. That some solution, what they told is, the due date for filing return, that will become time of supply. And periodical return technically here means written as per GST law only. Exactly. Are we getting clarity, everybody? So if periodic due date for filing such returns, a periodical return has to be filed. Now, my dear friends, an exceptional case I'll give you. Last case. Let's say one person, Mr. B, who is unregistered person, his turnover is actually more than 20 lakhs, 30 lakhs, 40 lakhs. Huge turnover is making, but so far not registered and never paid GST also. But one fine day, government caught him. When government caught him, invoice details not there, payment details not there, no details are available, and is also not required for periodical return because he is not a registered person. Then how do we determine time of supply? In that case, what they told is the date on which tax is paid. Are you guys able to see the screen? Yeah. Come on, guys. So date on which what's it? Tax is paid. The date on which tax is paid, that only becomes time of supply. Are we getting clarity, everybody? So residual provision says, if he is required to file periodical return, then time of supply will be the due date of such return. And if it is not required for periodical return, then time of supply will be date on which tax is paid. So government doesn't have an option, boss. If Mr. B is unregistered, we don't have any details. But when finally we caught him, telling boss, we understand we got here some details, we got that you made money in cash, we want you to pay the tax. Now what we can do now? The only thing they told, the day when you pay tax, that day only should become time of supply. Government doesn't have any option to fix that issue. So they told the day when which tax is paid, that day only becomes time of supply. But definitely they'll charge penalty and other things. That's for sure. Are we clear? Done. Next. Moving forward. 12.6.13.6. Time of supply for value addition. Time of supply for addition in value by way of what, sir? Interest, late fees, penalties. Now when I talk about this interest, late fees, penalties, it's important to know this concept of interest, late fees, penalty. So let's say when there is a supplier supplied some goods or some services, let's say for a value of 1 lakh. when for a value of 1 lakh supply is made, that recipient did not make payment on time. When recipient did not make payment on time, supplier might charge interest late fee penalty, no sir. For that interest late fee penalty, what will be time of supply? That's what we are talking. For the interest late fee penalty, time of supply will be the date when such supplier receives addition in value. For example, let's say goods supplied on 10th August. For what value, sir? 10 lakhs. When goods is supplied on 10th August for 10 lakhs, supplier did not make, recipient did not make payment on time. So extra 1 lakh penalty was taken. Total how much amount is taken? 11 lakhs is taken. When 11 lakhs is taken, what will be time of supply? The answer is, for 10 lakhs, normally will determine as per general rule. But for this 1 lakh, whatever we collected, that will be the date when supplier receives the addition in value. That means the date when supplier receives that 1 lakh, that date will become time of supply. And let me reiterate one point here. As per section 15(2)(d), value of supply shall include interest, late fees, penalty for delayed payment of consideration for any supply. This point will come back to us in value of supply, which we'll talk very soon. Maybe after 1-2 sessions, we'll talk about value of supply also, which is very important. Are we clear, my dear friends? Now, finally, the last discussion, which is pretty simple and easy. Time of supply in case of change in rate of tax. Friends, 12 deals with what? Time of supply related to goods. 13 deals with what? Time of supply related to services. 14 deals with time of supply related to change in rate of tax. Change in rate of tax. This will logically apply more for services only. Because for goods, payment date can never become time of supply. Invoice date only will become time of supply. Now what is the point now? Come on, 14 talks about time of supply in case of change in rate of tax. When I talk about change in rate of tax, sir, we have got 3 important dates, sir. Date number 1, date of invoice. Second date, date of payment. Third date, date of supply. Now when we have got 3 important dates, that is date of invoice. When we have got 3 important dates, that is date of invoice, date of payment and date of supply, sir. Between these 3 dates, I repeat again, sir. Between these 3 dates, one last time I'll repeat, between these 3 dates, there is a change in rate of tax. The rate of tax got changed. 12 became 18, maybe 18 became 28, 28 became 5, whatever it is. There is a change in rate of tax between these 3 dates. When there is a change in rate of tax between these 3 days, now an important point which you guys should note in this context is something like this. Generally, date of payment means what, sir? Date of payment means date when payment is entered in the books or date when payment is created in the bank, whichever is earlier. Let's say 25th August, entered in books, boss. Okay? 6th September, created in bank. Come on. 25th August is what, sir? Entered in books. 6th September, what, my dear friends? Created in bank. Generally, what is the answer? Date of payment means what? Date when payment is entered in the books or date when payment is created in the bank, whichever is earlier. So technically, date of payment should be actually, what is the answer? 25th August. But one special point, which is there only in section 14. Let's say, if change in rate is there on 1st September, then date of payment, I repeat again, sir. Then date of payment, what we will take is 6th September. Student is asking, what, sir? Why, sir? Why are you talking like that? I'll tell the reason why, sir. Come on, guys. So, let me tell you the reason why this concept is important, my dear friends. Listen, come on. Generally, what is the answer? Date of payment means what? Date when payment is entered in the books. Date when payment is entered in the books or date when payment is created in the bank, whichever is earlier. That is what is the answer. But in section 14, we have got one special point which says, if the credit in bank account, I repeat one more time, sir, if the credit in bank account is after 4 working days, I repeat one more time, sir, if the credit in bank account is after 4 working days, if the credit in bank account is after 4 working days from change in rate, then date of payment will be date when payment is credited in the bank. So please observe, sir. One more time, I repeat, it's important, please. Come on. Entered when 25th August. Change when 1st September. When the change is on 1st September, credited on 6th September, is the gap more than 4 working days? Answer is yes. So if the credit in bank account is after 4 working days, then date of payment will not be whichever is earlier. Then date of payment is directly date when payment is credited in the bank. This special point is not applicable for section 12 and 13. This special point is only for section 14. Are we clear? Please. Last time I'll repeat. In general, date of payment means date when payment is entered in the books, date when payment is credited in the bank, whichever is earlier. But if credit in bank is after 4 working days from change in rate, then date of payment means date when payment is credited in the bank. Going back to the discussion, sir. Come on. Last 1-2 minutes. Come on, let's kindly cooperate. Matter of just 2 minutes, guys. Let's complete this. Time of supply in case of change in rate of tax. Section 14. Come on. So there are 3 dates what I have given here, sir. Before, after, after. Before, after. Before, after, before. So don't just get confused, guys. It's very simple and easy. Not at all tricky. Pretty simple, guys. Supply is before. Invoice and payment both are what, sir? After. When invoice and payment both are after, they told time of supply will be invoice or payment whichever is earlier. Clear? Supply is before, invoice before, payment after. Supply before, invoice before, payment after. Then directly answer is date of invoice. That's because one point I'll tell you. If supply is before, invoice is before, payment is after, then invoice is the time of supply, sir. Next case, before, after, before, then this only becomes time of supply. The logic is very simple, sir. Whatever is going with supply, that becomes time of supply. And if nothing goes with supply, that means one thing supply is before, balance 2 both are afterward. Then balance 2 whichever is earlier, that becomes time of supply. If it's after, before, after, obviously this is the answer. After, before, both are before, these 2 whichever is earlier. After, before, obviously this is the answer. I hope you are getting clarity. Logic is basically, people also call it as majority rule and all. Pretty simple and easy, guys. I'm sure it makes sense to everyone. Clear? But please keep that special point, whatever I told in mind. Thank you. That's about this beautiful topic called time of supply. So friends, in our morning session, we completed discussion about 2 interesting topics. One is about the basic concepts, which are very important. Don't just underestimate that basics. That's very important. And we also discussed about something really interesting and important, that is about time of supply. And the reason we plan sessions morning and evening is for 2 reasons. One, you'll also have some breathing time and time gap, that's for sure. And second, the reason also very clear that you can also note down all your queries, questions, whatever you have, so that in the evening when we meet, at the end of the evening session, we can discuss all your queries also. And maybe by 4 o'clock or 4:30 or so, we will share your PPTs to you, so that you'll also get ready with those documents. Clear, my dear friends? We're preparing documents so that it will be very easy and we can make use of technology to make our learning more better. Clear, my dear friends? Thank you so very much. Have a great balanced time, and please make sure that you keep revising and do stay at home and stay safe. Thank you so much. Anybody has any further queries, you can ask actually. I'll be there for little more time too. Thank you. Thank you so much. Thank you everyone. Thank you. Then we can defer our queries to the evening time. We will meet at 5 o'clock. So try to log in by 4:45 or 4:50, so that if you have any more issues like technical issues, we can solve all your queries. We have got a question from Karthik. Like many circulars notifications are there in GST, do we have to remember all circulars notifications? Yes, we do have to remember, not everything, but few. What are all those? I'll definitely tell you. Don't worry about it. Next. Can we have a separate session to cover those? Karthik, we will not have a separate session on notification circulars, but wherever relevant notification circulars are there, all those things we'll learn at the respective places. But you not remember and mug up all the circular numbers, my dear friend. Don't worry. So for example, sometime back I told you about the concept of 15th November. That is actually given by notification only. 66/2017 dated 15th November 2017. I mean, if you're able to remember that notification number, you write that number. If not, you can directly write the answer. Don't worry.